But again, I think those are relatively low probability, and given the resilience of the market, then the move might even be smaller than that.
Before we let you go, Stu, big message for earnings season for investors right now.
Our big message? I think it's an idiosyncratic risk story. The beginning of the season, obviously this week's going to be banks. To me, that's really a discussion about M&A for a lot of investors. Middle of the season, it's the hyperscalers and what you get from CapEx. It's going to be very hard for them to beat what they did last quarter. So in that case, I think you're just hoping for a neutral, non-disruptive impact. And then third or fourth week, we focus on retailers and what are we seeing kind of from the low end of the consumer. And frankly, I think that third part is really the more important part for equity markets in terms of how much play there is. I think the banks is pretty well understood. I think the hyperscaler spend is pretty well understood. There's a lot of uncertainty about high-end versus low-end consumers. So I would say be patient, because you're going to have to wait 3 or 4 weeks to get what is probably the most important part of the earnings season done.
It's a good reminder. It's almost like earnings season never ends. Citigroup's
Joy.
U.S. equity trading head, Stuart Kaiser, thank you so much for joining us. We're going to get a talk on the stock market right now. Of course, we do have a lot of movement under the surface here. We do have, on a points basis, Tesla leading the gains, but we do have still a fair bit of red on the screen here. Remember, we have been fluctuating into the open, now still down on the morning. We have the big tech companies. NVIDIA is the biggest points drag on the day. Apple, Microsoft as well, right behind it. But you do still have Alphabet higher on the day, as well as Palantir. Let's flip up the screen here and look at the sectors as well to see what's happening. Remember, rates are a little higher on the morning. The 10-year is well over 4.4%. So you are not seeing, interestingly though, that feed into the market. The real estate sector, financials are actually higher on the morning. They're helping keep this near level as we head into the trading day. We're not seeing major declines on the S&P 500. Communication services is your biggest gainer on the day, Danny, up about 0.6%. Energy is a drag, though, about 0.7% lower.
I gotta say, if you were to tell someone Trump is going to announce major tariffs over the weekend, what happens 30 hours later, you'd probably expect more movement than what you're looking at, Shanali.
Yeah, sure would.
All right, coming up, another story that we are keeping track of. Elon Musk suggests Tesla shareholders will be polled on whether to invest in XAI. Shares higher by 1 1/3% for Tesla this morning. We'll have the story for you next. This is Bloomberg Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows, up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
You are watching Bloomberg Open Interest on this Monday morning, about 13 minutes into your trading day. And it is easy going for this equity market, despite the fact that we got letters to the EU and Mexico of higher tariffs, despite the fact of all the event risks from CPI tomorrow to bank earnings and continued discussions about those tariffs. S&P, NASDAQ, not as bad as the future session, down only 0.2%. And check out what's happening with the Russell. Small caps fighting back unchanged, but trying their darndest to go into the green. We also have some top calls for you this morning, some of the analyst action that we are focusing on. First up, CrowdStrike. That gets a downgrade at Morgan Stanley. Concerns about valuation. The firm says it's still a compelling long-term story, but growth is well priced into the stock. Those shares down just below 2%. Next up, we have the personal styling company Stitch Fix. That gets an upgrade at William Blair. That's all thanks to the confidence in the CEO's turnaround strategy. Those shares up a whopping 11% this morning. Finally, wrapping things up with PayPal. That gets a raise at Seaport Global. The company says that tariff-related impacts like slower consumer spending, that they've all turned out better than expected. Shares move higher by 3 1/3%, Sonali.
Now, Tesla shares in focus in the early trade. CEO Elon Musk suggesting in a post on X that the EV maker's shareholders will be polled on whether to invest in xAI. For more, we're joined by Bloomberg's Global Autos editor, Craig Trudell. And isn't this always the thesis behind Tesla, that it will integrate more and more to the broader ventures that Elon Musk has going on, that AI will be a bigger part of the story? But I think when this initially happened, the shareholders wouldn't expect that. That would also give them exposure to a large social media company. How is the story more complicated now?
Yeah, it's a messy one, Sonali. I mean, this is a company that we shouldn't forget has sort of been meshed in other parts of the sort of, Musk universe in the past. You think back to Solar City and how controversial a deal that was, where, back then the plan was to turn Tesla into more than just a car company and also a solar company. And, that isn't really something that sort of panned out in a meaningful way. The solar business was quite a letdown for Tesla. But, we've seen this transition now for, call it a couple years of Musk trying to really emphasize Tesla's work on artificial intelligence. So when he was standing up a standalone AI business, there were some investors who sort of cried foul there. And I think there is some concern about, just how much attention Musk is paying to this other business and whether, Tesla should get a cut. And I think that's a lot of what's going on here is investors seeing this appreciation in valuation for xAI and wanting to get in on that.
To that point, Craig, this idea that Musk would be distracted, it wasn't that long ago that this argument came up from Elon himself: give me more control of the company, of Tesla, or else I move away and concentrate my efforts on xAI. Is that still a concern for shareholders?
I think it is, and this is a guy who's long been stretched thin in very substantial respects in terms of just how many companies he runs. That was made, I guess, slightly less complicated by, combining X and xAI. But just last week, it feels much longer already. But, Linda Yaccarino stepping back from X and leaving that company, the amount of sort of emphasis on you know, advertising and trying to keep that company generating revenue. And meanwhile, I should also just, you know, note that we at Bloomberg have reported just in the last, you know, month or so that, you know, XAI is burning through roughly $1 billion a month. And so while Tesla investors, you know, some of them are eager to get in on XAI, this is, you know, by no means a company that's generating a lot of revenue and sort of covering its costs as it really tries to catch up in this AI space to the likes of OpenAI.
I mean, dare I ask, you would understand why XAI would have a linkage to Tesla in a lot of ways, but if you look at the valuation of SpaceX, for example, why wouldn't they also want a piece of that, right? If you look at XAI also, do the financials suggest that Tesla shareholders would get a materially higher stock price because of such an investment based on where we are today?
Yeah, I mean, I think it depends on the investor, right? Where, you know, I would say that you think about sort of holding companies and, you know, the old school, like sort of GEs of the world have really fallen out of favor, right? Investors have wanted to sort of place specific bets on specific companies and make sort of cleaner plays. Musk is really sort of going, you know, very emphatically in the sort of opposite direction of the rest of the world, where we've seen a lot of, you know, breakups. But in his case, I think, you know, the fact that he has been so successful in building these fast-growing companies and also in being, you know, such a sort of, you know, capital raiser, there's no sort of shortage or lack of interest in sort of getting behind this guy and backing him with more, you know, billions of dollars. And I think, you know, some Tesla investors absolutely see that as, you know, as these other companies are you know, generating, you know, higher and higher, you know, valuations in these private rounds, they want in on some of that appreciation.
Craig, excellent as always. Thank you so much for joining us. That is Bloomberg's Craig Trudell. Now, coming up, big shakeups in the consumer sectors, the very, very exciting world of Band-Aids to baloney. We'll give you a roundup. That's coming up next. This is Bloomberg Open Interest.
To the minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Luanda, Angola, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. Let's get a check on what stocks are doing today because, of course, we have choppy trade underway. We have the S&P 500 still down about 0.1%. The NASDAQ 100 still down more than 0.1%. But the Russell is actually where you see some love today, which is a little surprising because even though you see the 2-year yield marginally lower, about 1 basis point, the 10-year yield is higher, about 4.4%. The dollar is rising just a little bit. We have some stocks with some interesting moves. Of course, we are watching crypto crypto with Bitcoin passing that $120,000 mark. You have Coinbase up about 1.8% on the day. MicroStrategy, a little bit more of a levered play, as you know, up about 3.6%. Autodesk leaving its deal to buy PTC. Autodesk still higher, almost 4%, Danny. PTC, though, down about 1.4%.
Gotta say, a lot of deal news coming in today, Shonali. A lot of it coming from the consumer sector, too. Brands really trying to win over a consumer that, let's say, is being more picky these days. Tylenol maker Kenvue, for example, ousting its CEO in a win for activists. Meanwhile, Kraft Heinz, they're preparing to break itself up, possibly spinning off a large part of its grocery business. Let's get the latest. Shelley Banjo, Bloomberg's managing editor for Global Business, joins us now. And Shelley, what begins with financial engineering also seems to end with financial engineering. Kraft Heinz, if I'm not mistaken, this seems like a breakup to exactly what they were before the two of them united.
Yeah, it's all comes full circle. But this is what they're trying to do now, is to create a good co and a bad co, essentially. So put all the brands that are doing really well in one company and all the brands that are not doing as well in another, or spit it off and just sort of dole it out. We're still not sure yet on which strategy they're going to go after.
On Kraft Heinz, it's kind of interesting because you do see the Kellogg deal just a week ago. We see Kenvue, which was a spinoff, now kind of struggling through the latest strategy. What's going on in the sector that's forcing so much change?
Yeah, I think people want to spend money on things that they really want, and the things that they don't want, they're not going to spend money on. And so they're really trying to fight for that sort of market share. So Kenvue was, to your point, a spinoff and has been basically fighting for its life or its existence ever since the moment that it was spun off. So they had activists involved there from the get-go saying, even though you spun this off, there's still, within a bad company, there's still a whole bunch of, good and bad within there, underneath, when you look underneath the hood there.
How many of these companies are just kind of looking at what's happening with the global economic picture and blaming that and saying it is not our fault, it is a consumer that is starting to pull back, it's a consumer that's not picky, and we are simply victims to that environment?
Yeah, I think that's, goes without saying that these companies are going to blame the macro environment. But if you look at some of these individual brands, some are doing better than others. So you've got something like a Tylenol still, doing well. You've got something like Band-Aid that they're actually, innovating on making better Band-Aids, but then you
How do you improve a Band-Aid?
Pretty
that's
classic. Talk to the Kenvue people and they'll go on and on about how they've been improving the Band-Aids, and it seems to actually be working. But look at a company or a brand like Neutrogena, which is one of Kenvue's brands. They've completely lost the market there as other skincare products go in and take all of that market share from them inside the, CVS, Walgreens, pharmacies. So, there is work to be done there, and, the activists have been in there. They seem to have a plan, and they seem to be executing it.
It's interesting. To your point on performance, Kenvue slumping along since spinning off, but relatively flat. Kraft Heinz, on the other hand, has had a very tough 3 years. It's down almost 30%. It's down about 10% this year alone. What would spinning off certain businesses? They want to spin off a large part of the grocery business we've reported, for example. How would that help them?
Yeah, with Kraft Heinz, we've got a bunch of businesses that, are going against the grain in terms of the trends. So you're looking at things like with food dyes and things like that. People are trying to get healthier. They're trying to get stuff that have less additives, less chemicals, that kind of thing. And so that's sort of where Kraft is looking at now.
Shelley, we thank you so much for joining us, of course, covering all things global business. That is Bloomberg's Shelley Banjo, and of course, a lot going on in terms of deals, M&A, activism, and changes at the very, very top. Now we're going to give you a look at what's ahead this week because it's a really busy week. We're going to get the latest inflation print, CPI data tomorrow, plus big bank earnings kicking off with JP Morgan, Wells Fargo, and Citigroup. And remember, the valuations have run up as of late as M&A has been coming back. Bank earnings continue Wednesday with Goldman and Morgan Stanley and Bank of America. On Thursday, we get more economic data with U.S. retail sales, and we also get a read on the media industry when we get earnings from Netflix. And Danny, have you been watching Netflix? Because there's a lot of great content on lately, but people have seemingly been too busy to keep an eye on it.
I would love to kick back and relax on the weekend and watch Netflix, but then we get letters sent to countries about tariffs, and that kind of ruins our viewing. But that's okay. Hopefully we'll get to that at some point. Shonali, quick check on stocks. Here's a good reason why you maybe should just be watching Netflix today and not doing a lot. Look at this equity market, Shonali. It is impervious to the latest machinations coming out of Washington, D.C., down just about 0.1% for the NASDAQ, and it is a Russell 2000s index that is moving higher.
So interesting. Russell moving higher on a day like today while the others are down. But I will say something interesting about all this is that Stuart Kaiser is saying that investors are sneezing at 0.5% move in the S&P 500. So maybe that 1/10% matters a little bit like today. Now, coming up in the next hour, Nancy Tengler shares her top 5 stocks for the second half of the year, plus Deep Isolation CEO on the nuclear power renaissance. This is Bloomberg Open Interest.
Estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho talagi kon ahmalep ahmata suara pangok ahmalep manjang lenya ay kun mamanya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. A heartbreaker in Fall River, Massachusetts, where 9 people died, about 30 were injured when fire tore through an assisted living facility.
Firefighters arrived at the Gabriel house just before 10 last night and found a chaotic scene. Fire Chief Jeffrey Bacon.
We had an unspeakable tragedy here in Fall River last night. Our thoughts and prayers are with the families of the victims.
About 50 firefighters responded to the facility. The police department says officers carried carried out about a dozen residents who couldn't walk. Some of those who died were in the building, others at the hospital. Wendy Gillette, CBS News.
Sunday morning services at a Baptist church in Lexington, Kentucky turned deadly. Police say a man who'd shot and wounded a state trooper during a traffic stop went on to carjack a vehicle and drive it to the church, where he killed 2 women and wounded 2 men. Fayette County Coroner Gary Ginn.
The majority of the individuals that attend the church there are related biologically some way or another. If not, they've been friends for many, many years. So it's a very tight-knit group of people.
Police shot and killed the suspect. President Trump is scheduled to meet NATO Secretary General Mark Rutte at the White House this hour. Topping the agenda, new U.S. Patriot missile shipments that NATO will distribute to Ukraine to help fend off Russian airstrikes.
We basically are going to send them various pieces of very sophisticated military, and they're going to pay us 100% for them.
Mr. Trump is facing calls from congressional Democrats and Republicans to support a bill that would sanction countries that continue to purchase oil from Moscow. Today, European Union ministers agreed to step up negotiations with the U.S. over President Trump's 30% tariff threats, which the EU's trade chief says could wreck transatlantic trade. Denmark's foreign minister, Lars Løkke Rasmussen.
We don't want any kind of trade war. It is in no one's interest. We want a fair deal. But, of course, if we are met with tariffs, which is unfair, we should be ready to countermeasure this.
They're celebrating Bastille Day in France, the storming of the prison that marked the beginning of the French Revolution. CBS's Elaine Cobb has details from Paris.
Parisians and tourists lined the Champs-Élysées. Others were still in bed after a night of dancing at fire stations around the country, another July 14th tradition. Tonight there will be fireworks at the Eiffel Tower and a drone light show.
Dow futures reversing. They're up 59 now. This is CBS News. Dow actually down 50 now. One of the most populous countries in the world could be lowering the temperature soon. Here's CBS's Cami McCormick.
The government in India wants to require the lowest thermostat setting on all new air conditioners to be 68 degrees. It's part of an effort to save on electricity. India is dealing with increasingly hotter and longer summers. Current air conditioners can cool to as low as 62 degrees. India is one of the world's largest air conditioner markets. 1.4 billion people live in the country, and 10 to 15 million air conditioners are sold each year.
An alarming number of young kids, even babies, are swallowing popular nicotine pouches. New study in the journal Pediatrics shows calls to poison control centers skyrocketed 763% from 2020 to 2030. Those little pouches are stuffed with nicotine powder. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a debt spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube as well. Lisa Mateo, Paul Sweeney with you this morning in the Bloomberg Intelligence Program. Coming up, we're going to check in with Chris Anstey, Bloomberg Senior Economics Editor, to get the latest on the tariffs. This August 1st date seems to be one that we should be paying attention to. Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, Bitcoin. I'm talking let's call it $122,000 for Bitcoin. Let's get the latest call there from Mike McGlone. Christina Hooper, Chief Market Strategist at the Man Group. She's going to be in our studio, get her thoughts on these markets. And Allison Williams, we're going to be hearing a lot from Allison Williams over the next several days. She's Bloomberg Intelligence Senior Banks Analyst. We got a lot of the banks kicking off earnings tomorrow, including JP Morgan. So we'll get a little preview there. So we got a lot coming up in the next couple of hours. Let's kick it all off with Charlie Pellet.
Hi, thank you very much, Paul Sweeney. Here's what's going on. Stocks lower. Bitcoin, as you mentioned, closing in on 122. And this Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ivkr.com/around the clock. Equities lower right now with the S&P 500 index down 11, a drop of 0.2%. We've got the Dow down 0.1%, down 39, and NASDAQ down 28, a drop there of 0.1%. Stocks are falling as President Trump escalates his tariff threats against the European Union and Mexico. The 10-year 4.40% with the 2-year 3.87%. Spot gold little changed on the day, 33,054 on the precious metal, and West Texas Intermediate crude 68.17 a barrel, down 0.4%. Bitcoin, what a story there. 121,708 right now on Bitcoin. 121,000 closing in on 122,000. More from our Michael McGlone coming up in a moment. We've got Bitcoin up now by 2.2%. Bottom line, Monday morning, tariffs front and center ahead of bank earnings tomorrow. Amanda Agati is Chief Investment Officer for Asset Management at PNC Bank.
It's hard to argue with an S&P at an all-time high and a next 12 months earnings earnings per share at an all-time high and valuations effectively back there too. So I don't think equities are particularly bothered. But if August 1st is a really hard line in the sand, I think the market is going to struggle mightily.
Amanda Agati of PNC interviewed this morning on surveillance. By the way, you can hear more of that conversation on the Surveillance podcast. Download it wherever you get your podcasts. Bank earnings tomorrow morning. JP Morgan Chase, Citigroup, Wells Fargo right out of the gate. JPM right now down 0.1%. Citigroup lower by 0.5%. Wells Fargo swinging between gains and losses up right now by under 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube here. As Charlie was just mentioning, a little bit of red on the screen here. Let's take a look at how some of the stocks are moving today. I'm Paul Sweeney, Lisa Mateo, and we're joined by Bloomberg's Isabel Lee. Isabel, what do you got?
Definitely Coinbase. Shares are edging higher by 2.5%. That's COIN. So we have Argus Research initiating coverage of the stock with a recommendation of buy and a $400 price target. So Coinbase is now close to 400. It's at 396. Oh, and now it just hit 397. So definitely inching closer to that target. Argus said that over the past year, the shares have outperformed, and they note that majority of the outperformance has occurred post the passage of the Genius Act in June. So Argus also said that it's noteworthy because Coin is the first crypto native member to be included in the S&P. That happened back in May, and the stock has around 20 analysts buy, 16 hold, and 14 sell. Another thing, of course, Coinbase is influenced by Bitcoin, which is now around $121,000, which is a huge record. So now Strategy, MSTR, and Galaxy GLXY are also edging higher because as Bitcoin rises, so do crypto-linked stocks.
There they go, hand in hand. Let's move on to Autodesk. They're stepping back from an acquisition. Is that right?
That's right. And shares are edging higher, 4%. So investors are definitely liking that. Autodesk is ADSK. So they rose after reports that it's dropping its pursuit of PTC, which would have ranked it as one of the largest deals this year. So Autodesk is a software provider, and it decided to shelve the potential cash and stock deal for PTC. So Autodesk is bigger. It has a market cap of around $60 billion. PTC is a little smaller at around $23 billion. So in a regulatory filing Monday, Autodesk said it will remain focused on executing strategic priorities. It said it will allocate capital to organic investment, targeted and tuck-in acquisitions. Paul will know a lot of those. It didn't mention PTC, though. So That's what investors are implying.
K-View? What is that? That's the spin-off,
K-View,
right?
it's the maker of Tylenol, Neutrogena, and Listerine. So they said that its CEO, Thibaut Mongon, will leave the company, and board of director Kirk Perry will take over as interim CEO. So they also said that they will continue an ongoing comprehensive review of strategic alternatives. So this is a consumer goods company. It really has faced a lot of pushback from activist investors. And for now, the company is really kind of heeding to that call. And you're right, they were spun off from Johnson & Johnson's in 2023. So now Kenvue appears to be kicking off a number of changes to appease investors. And part of that is a new CEO search.
Johnson & Johnson, New Brunswick, New Jersey. We note that. All right, Isabel Lee, cross-asset reporter for Bloomberg News. Thank you so much for that. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Tariffs front and center again here, really taking out all the oxygen out of the room. President Trump just upping the game yet again, singling out certain countries, certain regions of the world for tariffs. August 1 is a date that seems to be the drop-dead date. Let's get the latest reporting there. Chris Anstey, senior economics editor for Bloomberg News. Chris, where are we here? It seems like President Trump is not backing down. He's not chickening out. He's not caving in. What do we know?
Well, what we know is that uncertainty remains the watchword of the day. You just referred to August 1st as the drop-dead date. Well, we all thought July 9th was the drop-dead date. Right. We also were told by Treasury Secretary Scott Bessent back in April that the April 2nd reciprocal tariff rates were going to be the ceiling for U.S. trade partners. But we've discovered that that's not the ceiling at all. Brazil now facing 50% tariffs, the European Union facing 30% tariffs, much higher than the 20% that were assigned on April 2nd. So we really have little visibility here as to where we're going to end up. What we do know is economists are saying that these latest broadsides and salvos by the president, threats of high tariff rates on a number of key trading partners mean that the effective tariff rate that we eventually end up with is going to be higher than what we thought, say, at the start of last week. But where exactly we end up remains a big question.
Well, Chris, EU President Ursula von der Leyen, right, speaking with Canadian Prime Minister Mark Carney today, will we see this coordinated response? I mean, what does this mean for the U.S.?
Yeah, that's very interesting. This seems to be the new dynamic at play, where a number of trading partners of the U.S. are kind of getting frustrated at the inability to close deals with Washington and are increasingly looking at cooperation between themselves in ways that we haven't seen before. You mentioned Canada and the European Union in talks about whether they want to either coordinate with regard to Washington or potentially deepen their own economic links. Also over the weekend, very interesting, after 10 years of talks between Indonesia, remember the world's fourth most populous nation, biggest Southeast Asian economy, 10 years of talks between Indonesia and the European Union, they have finally reached a strategic economic agreement. So these kind of, the pressure that Trump is putting on everybody else is encouraging them to talk together. Another one to keep an eye on is South Korea and Japan. They have had, ever since, Japan invaded Korea, in the early 1900s, those two neighbors have been at loggerheads. And what's very interesting to me is the new president of South Korea, President Lee, who was no big friend of Japan in the past, all of a sudden, met with Prime Minister Ishiba of Japan last month, is hoping for a visit there to Japan later this year. So all kinds of things are happening that might not otherwise have occurred because of the tariff salvos coming from Washington.
Chris, President Trump has not really concluded any major trade deals to date. Are some of our trading partners saying maybe we don't have to worry about this because we can just wait this guy out? I mean, how are they thinking about we haven't gotten many deals done?
Yeah, that's a good point. We of course we have the UK framework was one, and then some sort of a framework or truce at least with China. We keep on hearing from Trump's aides that a deal is close. We expect a deal to be reached with name that country very soon. India seemed likely as recently as last week. National Economic Council Director Kevin Hassett, in a televised interview this morning, was pressed on this and asked, Kevin, you keep on saying that deals are almost done. That the U.S. trade negotiating staff had never seen offers like have been the ones that have been made. And Hassett said, candidly, that at the final step, we present these these documents to the president, and it's his call. So and they don't get done. Again, we just don't know where we're heading here, and it's completely unpredictable.
Chris Anstey, thank you so much for joining us. Appreciate the reporting. As always, Chris Anstey, Senior Economics Editor for Bloomberg News, joining us there again. Tariffs front and center once again here on global trade. Again, August 1st seems to be a date in the Trump administration that they would like to see some things done. So we'll see if that date holds, but more uncertainty there. That'll be, I think, eclipsed a little bit starting tomorrow by earnings when we get some of the big banks starting to report earnings and maybe investors focus. We'll go back on the earnings out there. S&P 500 -4, Dow +6, NASDAQ +3. A whole lot of nothing going on out there. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are now fluctuating. We do have the Dow Jones Industrial Average in the green, advancing now by 24 points. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. S&P little change, down 1 point at 62.58, drop of less than 0.1%. We've got the Dow up 24, as I mentioned, up by about 0.1%. NASDAQ in the green as well, up 16, a gain there of 0.1%. All of this as President Trump escalates his tariff threats against the European Union and Mexico. And of course, bank earnings coming in tomorrow morning. Right now, we've got the 10-year 4.41%, the 2-year 3.88%. Gold down $8 the ounce, down 0.2%. West Texas Intermediate crude down 0.6%, just above $68 a barrel. Bitcoin, what a story there. 121,500 was flirting with 122,000 moments ago for Bitcoin. A jump today of just about 2%. So again, recapping, looking at a mixed market now with the Dow, NASDAQ, they are both higher. We've got the S&P 500 index trading down by 1 point. Word of a new destination for Southwest Airlines. Early next year, Southwest will be adding flights to St. Thomas in the Virgin Islands to its network. Service expected to begin in early 2026. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Tom from the Upper East Side writes in and says, what's going on with Bitcoin? As Charlie mentioned, 121,500. Let's get right to it. Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence, down in the self-proclaimed crypto capital of the world, Miami Beach, Florida. Mike, what is going on with crypto? That was a heck of a weekend for Bitcoin.
Well, hello, Paul. I'm actually coming to you from that great state of Indiana.
There we go.
Crop floor,
Farm country.
family. But what's happening? Yeah, there you go. What's happening? I used to own a farm right by here. What's happening in Bitcoin is a pile-on trade, and in a good way. It's working. But remember, Bitcoin I view as it's a risk-on asset. Risks are on. Stock market's hitting record highs. Gold hit record highs in March, and Bitcoin's just taking off, and it's becoming, a lot of it is ETF inflows. But also you see what's happening with headlines. We have the Trump administration very favorable. We have the Bitcoin, the stablecoin bill. And the key thing I want to mention about stablecoins, I like to call them crypto dollars. This asset and this tokenization of dollars is one of the key things that got me really bullish in this space in the first time. But now the tokenization is bringing all assets on chain, which means things like Dogecoin worth 30 billion. Our jokes are going to probably get arbed out. But right now, it's quite the risk-on asset, and Bitcoin's leading the way.
Now, saying all that, I mean, the House of Representatives getting ready for Crypto Week. I mean, it kicks off today. What exactly happens at Crypto Week? I'm sure there's a lot of crypto-related legislation going on. Can you break that down for us?
Well, that's the key thing, Lisa. What's exactly going to happen? For me, it's more the macro. Compared to the first Trump administration, where they really pushed back on this awesome technology that was adopting the dollar of its base layer, and all these dollars are going in treasuries. Now they figured it out. All this stable coins, this means investment in U.S. treasuries. And at least our government's figured out. A lot of it means that these stable coins are going to have hold 1-to-1 versus what they say their assets rather than fractional reserves, which means an issue with the banks, but I'll let them figure out. But the bottom line for me is it means this technology on a global basis is being adopted, and the dollar is the base layer. That means you can get dollars and transact in dollars over a stable coin, and we'll be able to any place on the planet, including places you're not supposed to be able to, which means one key thing is, remember the original reason for Bitcoin was peer-to-peer cash? Well, it's proving it's not going to be that. Why would you use Bitcoin like gold to buy anything? But it's proving that it's much more digital gold for that space. But in this area, I call them crypto dollars. It's just, I think it's nice to see it's acknowledging this technology and how it's really beneficial for the U.S. because the whole world has been able to, and we don't see a lot of stable coins in euros, let's put it that way. It's all gone to the dollar.
Mike, you're out there in farm country, Indiana. Talk to us about corn soybeans, wheat. What are you seeing from your farmer friends out there?
Yeah, unfortunately, they're very much bear markets. Corn and soybeans have dropped to key supports. Corn's right around $4 a bushel. To put that in context, it first traded that price in 1974 when we had the great grain robbery. I'll touch that later. The peak last in 2022 was about 8. Major pressure, great conditions. More supply is a problem. Same with soybeans. The thing about soybeans is less supply from the U.S., but massive supply out of Brazil. And the key reason was that big pump in prices to 2022, Russia's invasion of Ukraine, incentivized more supply. It did the same thing in crude oil. So now we're in the downward trajectories. And the key thing is, where is that low price cure? Unless you get some kind of drought to get a spike, we just don't have to figure out how low they go before it shuts off that excess supply and really picks up demand.
All right, Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, talking about Bitcoin and so much more. So let's turn to the markets now. So President Trump escalated his tariff threats against the European Union, Mexico. Traders gearing up for big bank earnings. How does this all affect the markets? Well, here to tell us more about it, Christina Hooper. She's Chief Market Strategist at the Man Group. Christina, thank you for joining us here in the studio. Lovely to have you. I want to point out stocks starting to kind of register some unease with the tariff situation. We saw something a little bit different last week. Were you surprised by that?
Yeah, I think that markets have been surprisingly, shall I say, naively optimistic when it comes to the tariff situation. I think there's not a recognition on the part of markets that even if we see cans continuing to be kicked down the road, it's impacting business decisions. In general, I think what we've seen historically and what we're seeing now is that it's having a chilling effect on business investment and hiring. It hasn't necessarily showed up very much in the data yet, but it will. And I think we have to worry that there are going to continue to be threats made and perhaps at some point actually implemented.
Charlie from Brooklyn writes in and says he wants to hear your call on CPI tomorrow. What do you expect?
Well, we could certainly get a significantly higher number. If we look at the Cleveland Fed nowcast, core CPI is tracking at about 3% year over year. So we have to be concerned, and I think certainly it may not show up in this CPI report. We may not see it till next, but it will show up because tariffs are having an impact.
No, they definitely are. What about for earnings season, of course, kicking up. But data from Bloomberg Intelligence, I wanted to point this out because they say Wall Street getting ready for the weakest earnings season since mid-2023. Do you agree? What's your outlook?
Yeah, absolutely. What we've seen is significant downward revisions to expectations for earnings this quarter. If we look back at March 31st, earnings growth was expected to be about 9% for the S&P 500. We're down slightly below 5% now. And I would imagine when all is said and done, it will actually be lower than that. So it is somewhat disappointing, but these are parts of the cracks I'm seeing appearing in the U.S. economy. We can't apply so much pressure and expect it to remain as resilient.
Last quarter, during earnings period, it was just the beginning of all the tariff discussion, and companies, rightfully so, really didn't have any visibility. A lot of companies pulled their guidance. How do you think the guidance outlook will be this quarter? Do you think companies will have a little bit more confidence, or is it still too much unknown?
I think there's still too much unknown. It's going to be hard to provide much in the way of guidance. What they can, though, give us is a sense of where the consumer is now. For example, I'm thinking about the big banks and what we might hear this week. So I expect we'll hear that there's more pressure on at least some cohorts of consumers. We saw a few of the big banks quietly increase loan loss reserves. That was a surprise recently, and I think we're going to see more of that as well.
So you mentioned big banks. Mag 7 earnings kicks off next week, so we have that to follow. Do you think they're going to funnel as much cash into AI?
I would expect that we're going to continue to see a pretty significant stream of money going into AI. I think what we've heard resoundingly from most companies is that the risk of underinvesting is greater than the risk of overinvesting.
Where are we in terms of valuation here? We've had this sharp rebound coming off that sell-off we had earlier in the year from tariffs, yet I'm not seeing earnings necessarily going up. Do I need to really be concerned about valuation here?
Absolutely. Valuations are rarely predictive in the short term, but we have to keep our eye on them because at some point it does become the short term and we actually have an impact. And what we know is that historically when cyclically adjusted PE ratio of the S&P 500 reached levels around where we are today, we've seen significant sell-offs, and I think that's what's likely to happen. There could be a number of triggers. We know stocks are vulnerable at these prices because they're priced at or near perfection, and a trigger could easily come from, for example, earnings disappointment, or in fact, we actually do get some significant tariffs on August 1st.
Now, you talked about this a little bit when you were getting into earnings. You said about how companies are going to approach it. What kind of tone do you think the executives are going to set? Because a lot of people just waiting to see what those top leaders are going to say.
I think they're going to be cautious. I don't know if I can characterize it as cautiously optimistic. I think they're going to be cautious because there are so many unknowns, and we're clearly seeing some signs of weakness for U.S. consumers. I mean, if we just look at continuing jobless claims, they are at high, 3-year highs, certainly nowhere near what we saw during the pandemic, but we have to be concerned with longer-term unemployment. One of the things Chair Powell has talked about repeatedly at different press conferences is how we're seeing a match between job creation and job losses. Both are on the low side. But if we see a situation where job losses pick up, and we already have a phenomenon where there are more and more long-term unemployed, people can't find jobs, I think that creates an environment in which we get closer to a possible recession.
30 seconds, what do we do in the bond market here? Do I take credit risk?
So I think investment grade credit risk is appropriate. I am concerned, though, that we are going to see more cracks. And in fact, I'm still a believer that there's a significant probability we go into recession this year. So I would be really careful, very discerning in the risk I take, and certainly would not be long duration.
All right, Christina Hooper, thank you so much. We appreciate it. As always, Christina Hooper, Chief Global Market Strategist for the Man Group, joining us live here in our Bloomberg Interactive Broker Studio. Coming up, we're going to check in with Jen Bartasha. She's got Kraft Heinz maybe breaking up, and I said, Kraft Heinz, didn't we just put this company together? So then I go and I look at the 5-year performance, Kraft Heinz stock, compounded annual over the last 5 years, basically zero, nothing. Whereas the S&P's risen about 16% compounded over the last 5 years. And even the S&P Consumer Index is up 10%. So breaking up this company, maybe it makes sense, and at least my bankers and my lawyers will get paid here. So we're going to talk with Jen Bartasha coming up. Looking at the markets here, a little bit of red on this screen here as we get ready for earnings to kick off tomorrow. The S&P's off 13 points, the Dow's off 60, and NASDAQ is off 30. Bitcoin up 1.5%, $121,000 for Matt Miller out there. If he could just find the code to his Bitcoin account, then he'd be all set. The euro stronger, 117. I need parity for my trip to Italy in the fall. Can we get parity? Can somebody work on that for me? This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red. Choppy start to the new trading week, but the stock market is moving lower. S&P down 8, holding close to a record, though, down 0.1% right now, 62.51. The Dow down 24, lower by 0.1%. We've got NASDAQ reversing earlier gains, down 13, now down by 0.1%. 10-year, 4.43%, with a 2-year, 3.88%. Gold down $11 the ounce, down 0.4%, 33.43 the ounce on the precious metal. West Texas Intermediate crude down 0.4%, 68.18 a barrel, and Bitcoin just below $121,000 right now, 120,890 on Bitcoin. It is showing a gain now of 1.9%. Bottom line here, stocks lower as President Trump escalates his tariff threats against the European Union and Mexico. Christina Hooper is chief market strategist at Man Group. Moments ago, right here on Bloomberg Intelligence, she told us the markets have been acting, quote, naively optimistic.
I think there's not a recognition on the part of markets that even if we see cans continuing to be kicked down the road, it's impacting business decisions. In general, I think what we've seen historically and what we're seeing now is that it's having a chilling effect on business investment and hiring.
Christina Hooper of Man Group. By the way, you can hear more of that conversation on the Intelligence podcast. You can download it wherever you get your podcasts. Kenvue says CEO Thibaut Mongon will be leaving the company as it continues to revamp the maker of Tylenol, Neutrogena, and Listerine brands. Shares of Kenvue, they're gaining on that word, actually turning lower now. They have been higher earlier on. Right now, we've got Kenvue down by 0.7%. Recapping, stocks lower. S&P down 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Thank you, Charlie. This is Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney. Paul, so summer barbecue, you think hot dogs, right?
Love it.
Okay, what's your favorite? What's your go-to hot dog?
Oscar Mayer.
There
no
you
question.
go. Yes.
Yeah, absolutely.
Okay. See, I'm a Brooklyn girl. I go Nathan's. But
okay, that's good. That's
that
good.
all said, there is some big news when it comes to your barbecue. So a company may be splitting up. Sources saying Kraft Heinz could break itself up, spin off into this large part of the business, into this new entity. What is this all about? Let's bring in someone who knows about it. Jennifer Bartashis, she's Bloomberg Intelligence Senior Analyst, Retail Staples and Packaged Food. Jennifer, I know sources are saying a lot of things. What's the latest that you're hearing about this breakup?
Yeah, good morning. So this is an interesting breakup because it's 10 years after they merged together, and it seems that the main portions of that initial merger will go their separate ways. The way we look at it, it looks like there's a core group of what they consider their taste elevation platform, which is the sauces and the seasonings. Taste elevation.
Oh, please. That's got McKinsey written all over it. Is that just spices and condiments?
That's spices and condiments.
There you go.
Yeah, exactly. And then they have, that's kind of been their growth area for the last couple of years. So we think that that's really going to be what will be the residual part of Heinz. And then it's undetermined yet exactly what will go into the rest of the business, but it'll be largely those grocery categories where they've invested a lot to try to revitalize brands, and it just hasn't worked in terms of really rejuvenating sales.
You know, when I think about brands in the shop, going to the supermarket, boy, those house brands, private label. Talk to us about the growth of private label in general. Boy, and if you're a brand like an Oscar Mayer or something that you spend gajillions of dollars over 100 years, it seems to kind of go by the wayside almost.
It's true. You've got a good point, Paul. Private label has been consistently growing and got a huge bump since the pandemic.
Yep.
And part of that is that the retailers have really invested in the quality and the differentiation of those private label brands. So where consumers now really consider them not just a replacement for national brands, but in some instances, just regular brands of their own right. And so, Kraft Heinz actually had reduced some of its exposure to private label when they sold off the Planters business, when they sold off the cheese, like the shredded cheese business with Kraft. But the core grocery business, they do still have a lot of exposure to private label.
So is this a lot of competition from, let's say, startup food companies appealing to younger consumers? I mean, what kind of sparked this?
Well, there's really been a shift in the way consumers are looking at brands. And unless you own a long legacy brand that you can reinvent and really, drive interest from younger generations, it's really hard to keep that going. And so what we've seen is that they've done a good job with revitalizing things like Philly cream cheese. But despite a lot of investment, brands like Capri Sun, Oscar Mayer, Maxwell House, these brands just aren't resonating with younger consumers. And that means that the growth prospects for those brands are a lot lower. And that makes it hard to really bill yourself as a growth type oriented company.
So I know, as I think back to my M&A memory banks 10 years ago, Kraft and Heinz, Berkshire Hathaway had a big hand in putting these two companies together. And look now, they're still the largest shareholder with just under 28% of the stock. I assume Berkshire Hathaway, Warren Buffett, has kind of signed off on this deal, or is open to it at least?
I would assume that they're open to it. Over time, Berkshire Hathaway has actually done quite well out of this deal, even though Kraft Heinz as an overall entity is probably disappointed in the overall analysis. But the merger was in 2015. It's been 10 years. The value of the deal at the time in 2015 was $45 billion. Today's market cap, it's $32 billion. And yes, they've sold off a couple of brands, but it just hasn't materialized to be the type of growth that I think Berkshire Hathaway initially envisioned it would happen.
Jennifer, can you dig more into some of the advantages, but also the risks associated with breaking up the company?
Obviously some of the advantages, this seems very similar to what Kellogg did when they spun Kellanova and WK Kellogg out into two separate companies. They separated the growth prospects and then those from the slow growth areas. That's very similar to what Kraft Heinz seems to be doing. Obviously, if you can focus on growth areas, that gives you undivided attention to really expand and grow. That would be an advantage. I think one of the disadvantages, and this is something that's kind of a broader question to consider, is whether there's a cycle that's starting. Because we've seen companies like Kellanova split. We see Unilever spinning off their ice cream business. And those new entities are now being bought up by others. So you've got Mars acquiring Kellanova. You have Ferrero acquiring WK Kellogg. But those, in order to get regulatory approval, you have to have categories that aren't overlapping. And so you're seeing a new birth of new kind of conglomerates of dissimilar portfolios. And so it makes me wonder if we're setting up another cycle where in another 5 years, 10 years, we're going to see these companies that have been buying up the underperforming brands going through a similar type of activity.
What's driving all this? It doesn't feel like this M&A activity, whether you're buying or divesting, is out of position of strength. It always feels like, I don't know, I'm doing it because I don't have any growth and I got to do something. I got pressure from shareholders to do something, so I'm either buying or selling. Because your business doesn't have a lot of growth.
No, it's true, Paul. And I think one of the crises that we've sort of seen in packaged food, at least as the North American companies, is a lack of real true innovation. So what's happened is a lot of companies have fallen into this pattern of innovation being a new flavor or a new extension, a new size of the product. And that's not really what gets consumers excited. You need to bring new and different products to market. And that's an expensive endeavor. And companies have sort of shied away from that. And although they're trying to reinvigorate that innovation pipeline, we just haven't seen a lot of home runs coming out since the pandemic. And so, I think when you've got that backdrop, you have to evaluate your portfolio and say, how do we focus on the strengths that we have? And can someone else do better with the categories where we're not doing as well?
All right, Jen, thanks so much for joining us. Jen Bartasha, Senior Retail Analyst, Bloomberg Intelligence. All right, Lisa, the key question, your Nathan's hot dogs, are you ketchup or mustard?
Oh, mustard with sauerkraut and red onions.
Okay, solid, solid. I'm a mustard person too, but if somebody put a hot dog with ketchup in front of me, I would not eat it.
Well, here's the thing. I just came back from Chicago, and they said if you put ketchup on your hot dog, no, that's a big no-no. They do not do that in Chicago.
In Chicago, okay, good to know, good to know. Yeah, I'm definitely a mustard person, but again, you throw a hot dog in front of me, with ketchup, I'll probably eat it as well. So there you go. S&P 500 down 11 points here today. This is Bloomberg. Good morning.
Listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Welcome back to Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney. Weight loss drugs, right? All the rage. I always want to know what is the latest with it. So here with that and much more is Sam Fazeli, Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceuticals. Sam, thank you for joining us this morning. Just want to ask, what is the latest? Because we hear so much about weight loss drugs and different companies. What's the latest you've been hearing so far?
Yeah, hi, Lisa. So in terms of what's happening in the market, we're still waiting to see whether the prescription counts for Novo Nordisk's US Wegovy numbers are up or not. They've been flat for pretty much most of this year in terms of the number of scripts that doctors are writing for their Wegovy. And the opposite is the case for Lilly's Zepbound. It continues to keep going up. And it's a pretty interesting battle, which seems to be currently being won by Lilly, and time will tell. What is interesting is that my colleague Ord Gerspacher just finished a deep patent analysis for, so that's right, exactly, Paul, for Wegovy. And I mean, the dates in terms of patent expiry, of course, they're important because that's when generics can come in and compete with you. Here we go from possibly, she says, 2031, 2032, in the US at least, to 2040. I mean, look, that's an amazing outcome. And she puts a decent probability on it in terms of the ways that they could protect it. So that could mean a lot for a product that could be selling $5 or $10 billion a year, right?
All right, we got to go to the elephant in the room here. I mean, Jesus, for our listeners on radio, Sam is in some kind of contraption. Like I'm guessing he fell off a bar stool and hurt his arm or shoulder here. What happened, Sam?
Yeah, it's that cheap drink you guys sell in the U.S. You know, it just doesn't work for me. What I need is classified growth red wines and white wines, right, Paul?
So what, I mean, I'm assuming there's something going on there. So, all right, so.
It's a rotator cuff surgery. That's it.
Rotator
It's
cuff,
quite straightforward.
He's not an athlete.
He was popping a bottle of Bordeaux.
Yes, he was popping a bottle of
That's what
Bordeaux,
happened.
threw out his shoulder, opening a bottle of Bordeaux. So talk to us about what's the latest on the cancer field, Sam? I know you go to a lot of conferences and you're on top of the latest research. What should we as consumers and maybe even investors in healthcare stocks and biotechs, what should we be thinking about as the next frontier on the cancer front?
Yeah, I mean, we have a bunch of conferences coming up very soon. So the Myeloma Conference, the International Myeloma Society in September, the World Lung Cancer Congress, then there's the big European Society for Medical Oncology Conference in October. During these, we're going to hear about whether there's going to be big step changes again in the treatment of some diseases, particularly lung cancer. So we got Summit Therapeutics with possibly some data coming up, maybe at the World Lung Cancer, we'll see, or at ESMO. And we've just done a survey of US physicians, which came back with very interesting comments, which we're going to write about tomorrow, about some other trials that are ongoing. So obviously I can't front run that. The data will be published tomorrow on the terminal. But there is stuff still happening in cancer where we're seeing potential for paradigm shift, and that's some of the things that we'll be referring to tomorrow. Of course, in the middle of all this, we have pharma companies continue looking for products to expand their pipelines through M&A.
Now, Sam, we've been talking a lot about tariffs lately. How is the biotech sector, even pharmaceuticals, if you can dig more into how they're being affected by tariffs?
Yeah, so that's one area. If you look at the performance of the pharma stocks relative to the rest of the market, I mean, Mag 7, I mean, I don't know where they're going, but Paul, I'm sure, knows more because of the background he has in analyzing tech. But they just keep going up. I mean, there's nowhere else for them to go. If you put them aside, okay, the S&P 500 maybe hasn't been as magical as when it includes the Mag 7, but pharma has been a little even less, a bit more lackluster, partly because of this continuing conversation about tariffs. That 200% is something that President Trump mentioned just very recently, although it's delayed till next year. You've got your most favored nation pricing that's coming up. You've got your possibility that the regulators are going to be, we don't know where the regulators are going at the minute, to be honest with you. Positive, negative, favorable, not favorable for the evolution of regulatory framework in the US. So there's a lot of questions, and I know this is Paul's favorite word, uncertainty, that still dogs the pharma sector.
Yep, that's certainly the case. And maybe, you know, August 1 might be a date. We get some more clarity there. Sam Fazeli, Director of Research for Global Industries and is Senior Pharmaceutical Analyst for Bloomberg Intelligence. He's convalescing there in London in our London studios. But he makes it into the studio, folks, even with one arm in a sling. So we appreciate that. He's playing hurt out there for us. That's what happens when you get old, Lisa. You know, things happen. They just kind of go out.
Are we going to see you in a sling? Jeez,
I hope not. I hope not, exactly. So Sam Fazeli there. So, and M&A, you mentioned M&A. I'm just so far in the first quarter, this is according to Sam's notes, so far in the first half, 32 billion of M&A in pharma, 13 deals. Last year, it was 16 billion for 16 deals. So dollar amounts certainly bigger this year. And we had the $10 billion deal for healthcare company Verona by Merck just last week. So again, I always joke that in my next life, I'm coming back as a healthcare M&A banker because they get paid every year. It just, these companies, if they can't, it seems like if they can't come up with a drug, develop a drug in their own R&D labs, they just go out and buy the best promising prospect out there. And that's kind of how it works. You know, so you get these biotech companies, if it hits, boom, it's a double, triple. If it misses, it goes to zero. It's such a tough business out there. That's why I think the hedge funds love the biotech business so much, because it is a hit or miss business. So we got all that coming. All right, let's take a look what's happening out there for more conversations like that's not it. We can talk about the market coming up in just a moment. S&P 500 off 3.5 points. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a debt spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, coming up in this hour, we are waiting potential comments from President Trump. If he does issue those, we will bring them to you live. Courtney McBride, Bloomberg national security reporter, is going to report to us on President Trump is talking about a, quote, major Russian statement today. She'll have some preview of that. Michael McKee, Bloomberg international economics and policy correspondent, talking about the trade situation out there. We look at a lot of countries talking about banding together to trade amongst themselves and maybe defend themselves against some of the U.S. trade practices are out there. We'll get the economic impact there. Walter Todd, President and Chief Investment Officer, Managing Director at Greenwood Capital. We'll get his thoughts on the markets here. Craig Trudell, Bloomberg Global Autos Editor, give us the latest on Tesla and Mr. Musk. Always in the news. But right now, let's kick it off. Charlie Pelham.
Very much, and here's what's going on. Right now, looking at a mixed market, we got NASDAQ higher. The Dow, the S&P, they are both in the red. Stocks are falling as President Trump escalates his tariff threats against the European and Mexico. Keep it locked in to Bloomberg Radio for the latest on any tariff developments. Here's where we stand. The S&P lower, little change right now, down by 1 point. The Dow is down 14, drop there of less than 0.1%. Choppy session, NASDAQ up 35, now up by about 0.2%. The Bloomberg Mag 7 index up 0.1%, with the 10-year currently yielding 4.43%, the 2-year 3.89%. Gold down $10 the ounce, down 0.3%, 33.44 on the precious metal. West Texas Intermediate crude down 0.5%, 68.07 a barrel, and Bitcoin at 121,000 right now. It is up by 1.6%. So tariffs front and center. As for the economic backdrop, Julie Beal is portfolio manager at Kane Anderson Rudnick.
The U.S. economy is still the most dynamic. It has the most stability to it. It has the most innovation. Our universities are bar none the best in the world. There's so much in this market that is really attractive and creates everyone to want to stay in relations with. But I think there's also this recognition of diversification being good, not just for our portfolios, but for the rest of the world in terms of the stability of their trading partners.
Julie Beal of Kane Anderson Rudnick. Bank stocks now higher after earlier losses. America's biggest banks heading into earnings season with tailwinds from trading and lending as they benefit from market volatility and steady borrowing costs. J.P. Morgan Chase reporting tomorrow morning up by 0.2%. Citigroup little changed, up just under 0.1%. Wells Fargo up 0.3%. By the way, all three report tomorrow morning, and yes, Bloomberg Radio is going to be all over those numbers as they cross the tape. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. As Charlie's just reporting, got some red and green on the screen here. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney with Lisa Mateo, and we're joined by Bloomberg's Denisa Sekova. Denisa, what are you looking at today?
Everyone's talking about crypto, so let's look at the cryptocurrency exposed stocks. Of course, Coinbase, a major one, up about 2% year to today, and then 60% year to date. This is really one of the biggest winners. Bitcoin itself obviously is rallying past 120,000. It's up 30% year to date. And we're in Crypto Week. Recently, the Congressional Committee declared this week as Crypto Week. We have major legislation moving through the U.S. House of Representatives. It's coming at a time where we have a lot of institutional demands. We have retail demand. We have ETF flows going wild in that space, going back to almost as high as they were in the beginning when those funds were launched. And really everything is up. Riot Platforms, Mara, Circle, there are so many companies benefiting from that. There is stablecoin legislation going forward. So really, as markets are seeing mixed start of the week, crypto is emerging as one of the winners here.
Boeing also got some good news from investigators. So is that helping shares at all?
Yeah, we're not seeing a big spike. In earlier trading was a little bit stronger, but Boeing indeed is up. The ticker is BA. It comes after a preliminary report that the Air India crash, and they found no evidence so far that would require them to take actions over Boeing 787 aircraft and the General Electric engines. General Electric is up on the news as well. The accident doesn't appear to have anything to do with the aircraft design, which is important for Boeing. Obviously, it had a very rough year last year. It was down 30%. There were investigations and there were a lot of issues with some of its aircraft. What we're seeing this year is the stock is up 30%. We're seeing a lot of optimism today. Citi boosted its target. Bernstein boosted its target, citing increased confidence in 737 and 787 production. So today, really good news for Boeing based on the investigations.
And a 52-week high for the stock. So it seems like it shed some of its concerns that a lot of investors had. And out of that Air India crash, I just kind of was looking at a lot of the news. It kind of looks like pilot error. I don't know. I mean, just because you have to physically flip those switches, and they don't make it easy to flip those switches either. So
Exactly. It seems like the preliminary investigation finds that.
Ooh, that's tough. All right, one more.
We have Best Buy down on the day. It's coming off a Piper Sandler downgrade. It's currently neutral. They say they don't see meaningful catalysts in the coming quarters when it comes to earnings growth. Obviously, that was a big beneficiary from the pandemic boom. A lot of people were splurging and buying so much. And, you know, it's definitely been a slowdown. The company is down 18% year to date. The company has been trying to reduce its exposure to China, but last earnings season, it reduced its sales and profit outlook. So it's definitely been one of those retail names where we see a lot of pressure. We saw Prime Day doing great, but clearly it has rising competition for Best Buy, and that's putting a lot of pressure there.
All right, Denitsa, thank you so much. We appreciate that, as always. Denitsa Sakova, she is a Bloomberg reporter for us in our studio here. Let's switch gears and get back down to Washington, D.C. Courtney McBride joins us here. She's a national security reporter for Bloomberg News. President Trump plans, quote, major Russia statement Monday, mulls some sanctions, I guess. Courtney McBride, national security reporter in D.C., joins us. Courtney, what do you expect to hear from President Trump today?
Well, I mean, it's anyone's guess. The president did say last night that he is planning to send more Patriot anti-missile batteries to Ukraine. He made clear that the U.S. wouldn't pay for those, but allies would do so. But, you know, it remains to be seen exactly what he means about this major statement. He's going to be meeting imminently with NATO Secretary General Mark Rutte. And so, you know, potentially we'll make that statement alongside him. There is also legislation moving in Congress that would give the president a little bit more power and some discretion on additional sanctions on Russia. But it's really unclear exactly what this major announcement will entail.
So why the turnout? I mean, hasn't the Trump administration kind of held back on providing weapons to Ukraine?
Well, I mean, the administration was, aside from a few pauses, the administration was continuing to deliver weapons to Ukraine that had been previously purchased by the Biden administration. So it was continuing to run down those supplies, but had not approved additional supplies for Ukraine. But the president has been very clear that he wants to help secure a lasting peace between Russia and Ukraine, and resisted a lot of additional pressure on Putin, as he thought that may derail those efforts. Now, after conversations with Vladimir Putin, he's signaled that he's frustrated with Russia's intransigence, and that this may be the way that he moves forward.
Yeah, following up on that, Courtney, President Trump always has prided himself on deal making. Doesn't seem to be working too well with President Putin. Where does that all stand? What do we hear from the White House?
Right. Well, Secretary of State Marco Rubio, who is, of course, also serving as National Security Advisor, met with the Russian Foreign Minister Sergei Lavrov last week in Kuala Lumpur. And the president and President Putin have had these conversations, and President Trump has indicated that Russia is not willing to make the sort of concessions that he thinks are necessary to actually move forward toward peace. And so this is a way potentially to exert more pressure and more leverage on Russia to come to the table.
Courtney, I want to go back to something you were talking about earlier, tougher Russia sanctions bill. This was an interview with NBC where the president also says that he expects the Senate to pass those tougher sanctions on Russia, but it's sponsored by Senator Lindsey Graham of South Carolina. So what is all of this together telling you?
Sure. Well, Senator Graham's bill does have some waiver authority for the president. So the idea is to give President Trump, the greatest possible latitude. But this would allow some, more financial restrictions on Russia that ostensibly could bring Putin to the negotiating table in a way that he has not been willing to come. And I think many supporters of Ukraine think that the combination of additional weapons for Ukraine and additional sanctions, could be potentially game-changing.
It's, call me a skeptic, but we've been putting sanctions on people for decades to seemingly little to no effects here, including Russia. And I thought I heard that from President Trump during the campaign, that he was looking for a quick end to this war. Is that still the policy or the expectation of this administration, do you think?
Well, there's been a shift, I would say, rhetorically from the president and from others in the administration that obviously the 24-hour deal is not in the offing, that it's a much more complex situation than that. But he does still seem confident that with the right levers in place that he can secure a deal and an end to the war.
Courtney, President Trump, he's been really critical of Russian President Vladimir Putin over Russia's continued attack on Ukraine. Have we heard? Oh.
Well, I think we may have President Trump, so we're going to go to that right now down in Washington. Courtney McBride, national security reporter, thank you so much. Right now, let's go to Washington, D.C., President Trump in the Oval Office.
Secretary General of NATO, highly respected by everybody that knows him, but in particular the European countries. They have great reliance on him, and he's done a fantastic job. And we had a tremendous meeting, I guess it's about a month ago, and I think Mark will tell you that it was really perhaps more important the date of November 5th. That was the election day. Maybe that was the most important, because we've made tremendous progress together. And one of the reasons that you're here today is to hear that we are very unhappy, I am, with Russia. But we'll discuss that maybe a different day. But we're very, very unhappy with them, and we're going to be doing very severe tariffs if we don't have a deal in 50 days. Tariffs at about 100%. You'd call them secondary tariffs. You know what that means. But today we're going to talk about something else. And as you know, we've spent $350 billion approximately on this war with Russia and Ukraine, and would like to see it end. It wasn't my war, it was Biden's war. It's not my war. I'm trying to get you out of it. And we want to see it end. And I'm disappointed in President Putin, because I thought we would have had a deal 2 months ago, but it doesn't seem to get there. So based on that, we're going to be doing secondary tariffs if we don't have a deal in 50 days. It's very simple. And they'll be at 100%. And that's the way it is. That can be more simple. It's just the way it is. I hope we don't have to do it. But regardless, we are going to be, we make the greatest military equipment in the world, whether it's missiles. You saw that recently in Iran, the way those planes flew in. They had every single, 14 bombs hit every target. Then you had the helicopters shoot a total of 30 bombs, 30 missiles, and they hit every single, Marco, is that right? Every single piece, every single target. And it was, I guess, on a scale of 0 to 10, they say it was about a 15. That's how successful it was. That's how lethal it was, a word they like to use nowadays. But it was an amazing, well-organized attack. that people in this country want to do for 24 years. You know, when we had the pilots in last week, they were saying, sir, we've been practicing this for 24 years, meaning people, not them, but other people that are a little older now, but they too. And you were the one that let us do it. But we've been practicing it 3 to 4 times a year for 22, 24 years, because they always knew they had to stop Iran from doing what they were doing, which is trying to come up with a nuclear weapon, a nuclear bomb. And we did it very successfully. And we make the best equipment, the best missiles, the best of everything. The European nations know that. And we've made a deal today, and I'm going to have Mark speak about it, but we've made a deal today where we are going to be sending them weapons and they're going to be paying for them. The United States will not be having any payment made. We're not buying it, but we will manufacture it and they're going to be paying for it. Our last meeting of a month ago was very successful in that they agreed to 5%, which is more than $1 trillion a year, so they have a lot of money. And these are wealthy nations. They have a lot of money, and they want to do it. They feel very strongly about it, and we feel strongly about it, too. But we're in for a lot of money, and we don't want to do anymore, and we can't. But we make the best, and we're going to be sending the best to NATO, and in some cases to maybe, at Mark's suggestion, if we go to Germany, where they're going to send early on missiles, and they'll be replaced, and NATO is going to take care of it. It's going to be coordinated by NATO, and they're going to work very much with Matt Whitaker, who's right here, who's a great ambassador, and Matt's going to be coordinating. You better do a good job, Matt.
I will.
But Matt's going to coordinate. He's a very talented guy. He's going to coordinate everything. So in a nutshell, we're going to make top-of-the-line weapons, and they'll be sent to NATO. NATO may choose to have certain of them sent to other countries where we can get a little additional speed, where the country will release something and it'll be mostly in the form of a replacement. And I'd like to have Mark, and again, just a highly respected, pretty young guy for having had the career that he's had, because he had an amazing career before going to NATO. So, and we spent a lot of time together over the last couple of months. And if you could say a few words.
Absolutely. No, Mr. President, dear Donald, this is really big. This is really big. You called me on Thursday that you had taken a decision. And the decision is that you want Ukraine what it needs to have to maintain, to be able to defend itself against Russia, but you want the Europeans to pay for it, which is totally logical. And this is building on the tremendous success of the NATO summit. The 5%, but also the decision to keep Ukraine strong and the decision to increase our defense industrial production. So based on that, that was Europe stepping up. This is again Europeans stepping up. So I've been in contact with many countries. I can tell you that at this moment, Germany massively, but also Finland and Denmark and Sweden and Norway, the United Kingdom, the Netherlands, Canada, they all want to be part of this. And this is only the first wave. There will be more. So what we will do is work through the NATO systems to make sure that we know what Ukrainians need, so that we can make packages. Of course, in a way, we discussed it this morning with Pete Hegseth at the Pentagon, in a way that, of course, the US will keep on its stockpiles necessary to defend this country. That's absolutely clear. But it will mean that Ukraine can get its hands on really massive numbers of military equipment, both for air defense, but also missiles, ammunition, etc., etc. So if I was Vladimir Putin today and hear you speaking about what you were planning to do in 50 days and this announcement, I would reconsider whether I should not take negotiations about Ukraine more seriously than I was doing at the moment, if I was Vladimir Putin. But when I'm Ukraine, I think this is really great news for them. So I really want to thank you for that. And it means the Europeans paying for it. And again, I mentioned all these countries, we will deal with that. And exactly as you said, it might also mean that countries will move equipment fast into Ukraine and then the US later backfilling it because speed is of the essence here. So really, thank you. This is important.
You did a great job. That's a really great job. We've been very successful in settling wars. You have India, Pakistan, you have Rwanda and the Congo that was going on for 30 years. India, by the way, and Pakistan would have been a nuclear war within another week, the way that was going. That was going very badly. And we did that through trade. I said, we're not going to talk to you about trade unless you get this thing settled, and they did. And they were both great leaders, and they were great. But Rwanda and the Congo, that was going on for 30 years, and at least 7 million people killed, and killed with a lot of pretty rough weapons like machetes, heads chopped off, going on for many years. You couldn't even get near the countries. Nobody wanted to get near. It's so frightening. And we got that one solved. Serbia, Kosovo, got that solved. That was going to be one that was going to happen. And again, that was something I used. I use trade for a lot of things, but it's great for settling wars. That was really very important. We're working, Marco's working very hard with everybody here on the Strip, the Gaza Strip. I call it the Gaza Strip, one of the worst real estate deals ever made. They gave up the oceanfront property, one of the worst deals ever made. But it was supposed to bring peace, and it didn't bring peace. It brought the opposite. But we're doing pretty well on Gaza. Steve Witkoff is here, and I think we could have something fairly soon to talk about. And we solved another one, that we just seem to have, Armenia and Azerbaijan. It looks like that's going to come to a conclusion, successful conclusion. We worked on Egypt with a next-door neighbor who is a good neighbor. They're friends of mine, but they happened to build a dam which closed up water going into a thing called the Nile. I think if I'm Egypt, I want to have water in the Nile, and we're working on that one problem, but it's going to get solved. They built one of the biggest dams in the world, a little bit outside of Egypt. You know about that. You've been hearing about that one. And that turned out to be a big problem. I don't know. I think the United States funded the dam. I don't know why they didn't solve the problem before they built the dam. But it's nice when the Nile River has water. It's a very important source of income and life. It's the life of Egypt. And to take that away is pretty incredible. But we think we're going to have that solved very quickly. So we do good. The only one we haven't been able to get to yet is Russia. I'm not happy. And I will tell you that Ukraine wants to do something. Again, it's a war that should have never started. If I were president, it never would have happened. I used to speak to President Putin about it a lot. It was the apple of his eye. But once I saw what was going on, I said, they're gonna have a war here. I was outside. Election was rigged. And I was outside looking in. And I said, that thing's going to be a war. Couldn't believe it, because what Biden said was the exact opposite of what should have been said. And it started, and it's a real mess. We're losing, I guess they're losing 5,000 or 6,000 people a day. It's actually now more. I was saying 5,000 a day. It's actually more now. Mostly soldiers, but a lot of people in cities and towns that are getting blown up too. It's a horrible war, and it should be stopped. And so if it's not done, if we don't have an agreement in 50 days, that's what we're doing. Secondary tariffs, and they're biting. And I hope we don't get to the point where we do, but I've been hearing so much talk. It's all talk. It's all talk, and then missiles go into Kiev and kill 60 people. It's got to stop. It's got to stop. But the purpose of this is to say that this is a very big deal we've made. This is billions of dollars worth of military equipment is going to be purchased from the United States, going to NATO, etc. And that's going to be quickly distributed to the battlefield. Ukraine will take it up. And, say what you want about Ukraine. When the war started, they had no chance. And they still would have had no chance if the equipment, they had the best equipment, because we do make the best planes and missiles, and we make the best military equipment in the world by far. We have new things coming out that are beyond belief, and I'm very excited about the Golden Dome. It's going to give us very strong protection. We've already started that. But they had courage, because somebody has to use that equipment. And they fought with tremendous courage, and they continue to fight with tremendous courage. But they don't have, they're losing on equipment, and Russia's really taken a very positive, very strong, what they've done the last couple of weeks.
Without military reasons, so what they are doing is 700 drones a day, missiles, bombing cities. This is not because of military goals. It is just creating panic, keeping people out of their sleeps, hitting towns. It's really terrible, and it is meaning a lot of people lose their lives, but also the infrastructure, whole cities being
They're wiping out the electric. It's going to take years to rebuild it. That's going to be the next problem, because that's going to take a long time. Cities, many of the cities are knocked down to the ground. Many of the people have left, but many have stayed. I don't know. They actually stay. Most have stayed. Actually, it's incredible that they stay, and knowing that a missile could be hitting your apartment house, and your apartment house that you're sitting in could collapse on top of you. And they do very heavy construction. They don't use rebar. They do very thick concrete construction. Those are heavy buildings, big buildings and heavy buildings, and they collapse like they're made out of paper. It's unbelievable to see this happening with people, so many people being killed. So we think we're going to make progress, and we hope we're going to make progress. In the meantime, we're going to get you good service on what you need. And we really became friendly with NATO this last meeting. You know, we went from 2% to 5%, which everyone said was not even a possibility. They weren't paying 2%. Many of them were paying much less than 2%.
But even those, since you became president, all committed to the 2% before the summit. And now collectively we committed to the 5%.
That's right, they did. They've been very good. And I think I made a lot of friends over there. We had a couple of days of very intensive talks. And they're great people. They're leaders of countries. Leaders of countries. Many of them great countries, some of them smaller countries, but for the most part, that's some very solid, strong countries, and very successful. Some of them are among the most successful countries in the world. So that's the story. We hope that's going to have an impact on Vladimir Putin, and we hope it's going to have an impact on Ukraine also. We want to make sure that Ukraine does what they have to do. All of a sudden they may feel emboldened, or maybe they don't want. You know, this is a very difficult situation.
Ukraine wants a peace deal.
I think so.
And they will stay committed to that. There's no doubt they want it. But the Russians have to become.
They have to continue to want it, though.
Yeah, I agree. But we will. You and I will make sure of that.
All of a sudden they get no.
You and I will make sure of that.
We'll make sure. I feel confident that they will do what has to be done. Plus, we have certain parameters that both sides know, and we already know what should be done. So I think that's going to be it's going to be very strong. We want everlasting peace. Any questions, please? Yes.
Thank you, Mr. President. What was the tipping point for you in making this decision? Was it a conversation with President Putin? Was it a piece of intelligence? And why are you giving 50 more days?
I think I think it's a very short period of time. I think, don't forget, I've just really been involved in this for not very long. And it wasn't initial focus. This is a Biden war. This is a Democrat war, not a Republican or Trump war. This is a war that would have never happened. It shouldn't have happened. A lot of people being killed. When the final numbers come in, you're going to see a lot more people are being killed in this war than you think, than you've been writing about. It's a very deadly war. They're all bad, but this is a very deadly war. The numbers are going to be far greater. When an apartment house comes down, and they say 2 people were slightly injured. No, many people were killed. And those numbers will be at some point accurately reported. So far, they're not. It's a deadly war. I think that you're just going to see, I think you're going to see strong movement. I hope so. I hope so.
And what about
the secondary tariffs are very, very powerful.
What about the tariffs that the Republicans in the House and the Senate have ready? Those are 500%. Sure. Why are you doing 100%?
Well, the Republicans are moving very strongly in the Senate, giving us total control of it. But I'm not sure we need it, but it's certainly good that they're doing it. And Lindsey Graham's working hard. The whole John Thune, all of them, they're all working hard. And they're in coordination with Mike Johnson, Speaker in the House. And I think they've actually crafted a pretty good piece of legislation. It's probably going to pass very easily. And that includes Democrats. And there's some little tweaks. But I don't want to say I don't need it, because I don't want them to waste their time. It could be very useful. We'll have to see. But we can do secondary. We're probably talking about 100% or something like that.
So can you clarify?
We can do secondary tariffs without the Senate, without the House. but what they're crafting also could be very good.
So are you suggesting then that the Congress should move forward with those sanctions, the 500%, and that your 100 would be a separate additional package?
Yeah, I mean, the 500 is, sort of meaningless after a while, because at a certain point it doesn't matter. It's not going to be, it's 100. 100 is going to serve the same function. But, yeah, I have it at 100%. They may have it, I don't know what they're going to end up with. They may have it at 100 too. They may have it at 500. But they're doing some good work in the House, and I think in the House and the Senate. And as you know, they're coordinated, and they can have it done quickly. They said they'll have it as quickly as I need it. So we'll see. We're talking to him. In fact, John Thune's coming over later on to talk.
Did you call for it yet?
Yeah, he's gonna come over.
Thank you, Mr. President. Is it your view that Vladimir Putin mischaracterized his dedication to? Is it your view that Vladimir Putin did not clarify his intention to a peace deal?
Well,
and what happens now in the next phase? Is there?
We're going to see. I mean, we're going to go for a period of time. Maybe he'll start negotiating. And I think I felt. I don't know about you, Mark, but I felt that we had a deal about 4 times. Mm-hmm. And here we are, still talking about it.
And he didn't send serious people to the negotiations. So I remember that you were able, with Marco Rubio and with Steve Witkoff, to get these talks going in Istanbul.
Yep.
I remember I was myself in Turkey for NATO business in May, and we really put pressure on the Ukrainians to send a senior team into Istanbul, and they did. But then the Russians came up with this historian explaining history of Russia since 1250.
We thought, and I thought, we should have had a deal done a long time ago. But it just keeps going on and on and on, and every night people are dying. A lot of people, a lot of Russian soldiers are dying, by the way, and a lot of Ukrainian soldiers too. But a lot of Russian soldiers are dying.
100,000 Russian soldiers since 1st of January. Since January, 100,000 Russian soldiers dead since January. So if anybody in Moscow is listening to this, again, 100,000 dead Russians since January. This is what President Putin is doing at the moment.
Yeah, please.
Will these be Patriot missiles specifically, or Patriot batteries that you're planning? And
Everything.
when do you
everything. It's Patriots. It's all of them. It's a full complement with the batteries.
And when do you expect them to arrive in Ukraine, sir?
Well, we're going to have some come very soon, within days, actually. Because a couple of the countries that have Patriots are going to swap over and will replace the Patriots with the ones they have. And Matt will coordinate with NATO. But so it's going to be, they're going to start arriving very soon.
And this afternoon, Boris Pistorius, the German defense minister, is visiting Pete Hegseth, the Secretary of Defense, and we'll discuss also, I think, on this whole Patriot thing. Norway is involved, so that's on the Patriots, but this whole deal is also about missiles or ammunition, so it's broader than Patriots.
We have one country that has 17 Patriots getting ready to be shipped. They're not going to need them for them. So we're going to work a deal where the 17 will go, or a big portion of the 17 will go to the war side.
Mr. President.
That can be done very quickly.
Mr. President.
Mr. President,
yeah, please.
Could this transaction with NATO be viewed as a step towards achieving peace, letting Putin know that now Zelensky has a little bit more powerful tools in his tool chest, and maybe that brings him to the table to achieve peace? Because I know that you wanted to do that.
Brian, that's what we've been saying. I think you might have expressed it better if you wanted to. That's exactly what it was.
Summary.
That was a nice summary. I think he's done better than us. He's a very good guy, I can tell you that. But no, it's well said. Yeah, I think this is a chance at getting peace. Or it's just going to be the same thing. I have to tell you, Europe has a lot of spirit for this war. A lot of people, when I first got involved, I really didn't think they did, but they do. And I saw that a month ago, and you were there, many of you were there. The level of esprit de corps, spirit that they have is amazing. They really think it's a very, very important thing to do, or they wouldn't be doing it. Look, they're agreeing to, they're paying for everything. We're not paying anymore. We have an ocean separating us. I said, we have a problem. We make the best stuff, but we can't keep doing this. And Biden should have done this years ago. He should have done it from the beginning, but he didn't. He didn't know he was there. This guy, what a horrible job they did to this country. And I just hope between the border and this and so many other inflation, what a horrible administration. The worst administration in history, in my opinion. That's not my opinion. I think it's everybody's opinion. But this is something that shouldn't have happened, and we're going to see if we can end it.
If I can follow up.
I do want to make one statement. Again, I said it before. This is not Trump's war. We're here to try and get it finished and settled and whatever. Because nobody wins with this. This is a loser from every standpoint.
From day
This
one.
was Biden, and this was other people. And it's very sad. It's a very sad situation. This gentleman's doing a great job. He's going to, I think he's going to get it, and Matt and everybody else that's working on it. I think you'll get this thing over with, hopefully.
Mr. President, you've praised European countries today as standing up for Ukraine, as being strong. Will you allow them to continue to negotiate tariffs lower than 30% before August 1st, or is the deal set at this point?
What does that mean? You mean you're talking about the tariffs?
On trade, on tariffs.
You're back on tariffs. You're on a more friendly tariff, right? A little bit more friendly tariff.
Perhaps.
No, we're going to be talking to people. We have, you know, I watched the show this morning. They were talking about, well, when's he going to make the deal? The deals are already made. The letters are the deals. The deals are made. There are no deals to make. They would like to do a different kind of a deal, and we're always open to talk. We are open to talk, including to Europe. If in fact they're coming over, they'd like to talk to us.
Mr. President, is there any concern about the U.S. stockpiles? There was a pause in delivery of weaponry to Ukraine in order to evaluate, apparently, the U.S. stockpiles. What came out of that?
Evaluation. I mean, this was a very big, what we're talking about today is a very, very big day. And what Pete was doing, and me too, I knew what Pete was doing, was evaluation, because we knew this was going to happen. And now we actually announced it. They voted on it. It's all been done. So obviously that has a big impact on, you know, when you say pause, obviously you're not going to be doing things if you don't know what's going to happen here. But we were pretty sure this was going to happen, so we did a little bit of a pause. But this is a very big, this is a very big event today. This is something
Mr. President, if Putin escalates further, how far are you willing to go in response?
In what?
How far are you willing to go if Putin were to escalate, send more bombs in the coming days?
Don't ask me a question like that. How far? I want to get the war settled. They're not Americans that are dying in it, and, you know, I have a problem, and JD has a problem. It's a stance that he's had for a long time. They're not Americans dying, but there are a lot of people dying, and on something that should be able to be settled. And we all agree with that. This group of people, you know, we want to defend our country, but, you know, ultimately, having a strong Europe is a very good thing. It's a very good thing. So I'm okay with that. Yeah, please, in the back.
Yeah, is there a ceiling on what the Europeans are willing to pay for? And it sounds like, are you ruling out the U.S. paying for some from additional weapons through drawdown authority?
Shall I try to answer that? Because basically what the president is saying, that he is willing, of course, taking consideration what the U.S. needs itself. So it's not that you can have a shopping list and you can order whatever you want, because the U.S. has to make sure that the U.S. keeps its hand on what the U.S. needs, also to keep the whole world safe, because in the end you are the police agent of the whole world. You're the most powerful nation on earth, the most powerful military on earth. But given that, the U.S. has decided to indeed massively supply Ukraine with what is necessary through NATO. Europeans 100% paying for that. And what we have been doing over the last couple of days is talking with countries, and I just mentioned the ones who in the first wave immediately said, we want to chip in. And then you are really talking about big numbers. Take Germany visiting today. They're really talking about big numbers.
Can we get some clarity?
I will say that I spoke with Germany, spoke with most of the larger countries, and they are really enthusiastic about this. They want to, and you know, they're willing to go very far. I will tell you, you know, as per your question, how far would I go? They want to go very far. They don't want this to happen. That's why I think from Putin's standpoint, it would really be good. He gets the country's economy is doing very poorly, and he's got to get his economy back. He's got to save his economy. He could save his country in a sense, but the economy can destroyed a lot of countries over the years. He wants to get that economy back. And, you know, he's got a great country for trading and other things. If they could use the assets instead of war, he's got some tremendous potential. That's what I would say.
How did you deliver this news to Putin, sir?
Say it?
How did you tell Putin this was coming?
I speak to him a lot. about getting this thing done. And I always hang up and say, well, that was a nice phone call. And then missiles are launched into Kiev or some other city. And I said, it's strange. And after that happens 3 or 4 times, you say, the talk doesn't mean anything. My conversations with him are always very pleasant. I say, isn't that a very lovely conversation? And then the missiles go off that night. I go home, I tell the First Lady, I spoke to Vladimir today. We had a wonderful conversation. She said, oh, really? Another city was just hit. So it's like, look, he's, I don't want to say he's an assassin, but he's a tough guy. It's been proven over the years. He's fooled a lot of people. He fooled Bush. He fooled a lot of people. He fooled Clinton, Bush, Obama, Biden. He didn't fool me. But what I do say is that at a certain point, ultimately talk doesn't talk. It's got to be action. It's got to be results. And I hope he does it. It's potentially such a great country to be wasting so many people on this and the money. And look at what's happened to his economy. Look at what's happened. So,
and with the threat in 50 days, the economy will be hit very hard.
I mean, look, I hope he's going to do it. He knows the deal. He knows what a fair deal is. If there is such a thing as a fair deal, there's no winners here. This is a loser. This is a loser. And I dealt with him from the beginning. It wouldn't have happened, but I will say Ukraine was the apple of his eye. We talk about it. It was the apple of his eye, but it wasn't going to happen. And he understood that. It wasn't going to happen. And then I noticed, after I was out, I noticed soldiers forming at the border. And then I heard horrible, stupid things being said from the other side. And I said, they're really handling it very, very wrong. It's a shame. Yeah.
Can I add one thing, and that is about President Trump, because you came in office in January. On the 12th of February, you had your first phone call with Putin. I think you did exactly what I hoped you would do. That is breaking the deadlock, starting the conversation, because you have to test him. I know Putin very well from the days when I was Prime Minister in the Netherlands. You have to test him. And you did this, and you really gave him a chance to be serious, to get to the table, to start negotiations. Steve Witkoff, Marco Rubio, we all try to help you. But you've now come to a point where you say, well, hey...
We actually thought we had probably 4 times the deal.
Yeah.
I mean, you would have called and you would said, this looks good.
Yeah.
And then the deal wouldn't happen because bombs would be thrown out that night and you'd say, we're not making any deals. It was like...
But you breaking the deadlock was crucial because you had to start that process. And you were the only one who was able to do that.
I think we'll get it done.
Do you think he's reasonable enough to negotiate an end to
I think
this?
we're going to get it done. I think, look, this is a very powerful situation. You have very wealthy countries buying the best equipment in the world. And we have the best equipment in the world. We make equipment like no other. Our submarines, nuclear submarines, are so powerful. They're the most powerful weapon ever built. And we have the best in the world they're 20 years behind, 25 years behind us. We have the greatest equipment anywhere in the world. I just hope we don't have to use it. Yeah, please.
Thank you, Mr. President. On a separate topic here, President Biden, of all people, spoke to the New York Times over the weekend. He did not speak to them on the record during his time in office at all, but he spoke to them recently. And he defended his use of the auto pen and said that he signed off on every decision. But at the same time, the Times reports that he did not individually approve each name for the categorical pardons that applied to large numbers of people. What are your take on that? Any new revelations from that?
Well, I mean, you're talking about the auto pen. Look, the auto pen, I think, is maybe one of the biggest scandals that we've had in 50 to 100 years. This is a tremendous scandal. And I know the people on the other side of the, see that desk, that Resolute desk? Unfortunately, he used it before me. But, we have our choice of 7 desks. They're all beautiful. But I chose the Resolute, and so did he, unfortunately. But the people on the other side of the Resolute desk, I know them. Lisa, the whole group, and they're no good. They're sick people. And I guarantee you he knew nothing about what he was signing. I guarantee it. So they're going to figure it out, and we'll see what happens. But to me, the auto pen, you elected president. You know what the auto pen is supposed to do? Sign thousands of letters from young people that write. We get thousands of letters a week, Susie, right? Thousands. I mean, tens of thousands sometimes. I look at a room, there's a room where we have many, many people working, responding and sending letters back. That's what an auto pen's supposed to be. To write to a young 7-year-old boy that writes to the president and he wants to be president someday and he loves America. That's what the auto pen's supposed to be. It's not supposed to be for signing major legislation and all of the things. No, the auto pen, and I doubt he knew. I doubt they even spoke to him about it. I think they had, it's called a freewheeling auto pen. Like, Biden was never for open borders. Biden was never for transgender for everyone. So I don't think I think the radical left people that took over the White House, and if I didn't win, our country was finished. You know, when I was in, and I said this a couple of times, I hope I don't bore you with it, but when I was in Saudi Arabia, I was in Qatar, I was in UAE, and then I met with all of your leaders, yes, including you, a great leader. He's now the leader of many countries, not just
No.
But I met with a lot of leaders over the last 2 months in the Middle East and all of the NATO countries. And I will tell you, they had one common phrase. They thought America was dead 1 year ago. And today they say, and they all say it, and I hope you'll back me up in this, but they say now it's the hottest country anywhere in the world. It is. Look at our numbers. Look at the numbers we made. You see, we made $25 billion last month. We didn't make that for years. The tariffs are kicking in. The economy is very strong, even though we have a Fed person who's terrible. He doesn't know what the hell he's doing, but that's all right. We blow through interest rates. We're doing so well, we blow through it. Be nice because people would be able to buy housing a lot easier. But think of it. We thought your country was dead, and they were dealing with China because they were really going to China, but not anymore. But we thought your country was dead, and now you have the hottest country anywhere in the world. So we've done a really good job, and it's an honor to have this man. This man is a star, and he's going to be dealing with another one of my stars, Matt, and you're going to do a great job, Matt Whitaker. Okay? Thank you very much, everybody.
All right, that was President Trump in the White House speaking to the press and speaking to the NATO Secretary General, talking about some significant news as it relates to Russia. Trump threatens Russia with Trump threatens secondary Russia tariffs on 100% if no deal is achieved in the next 50 days, and also promises more weapons for Ukraine paid for by Europe. Let's talk to Roz Matheson right now. She's a Bloomberg News director for Europe, the Middle East, and Africa. Roz, what did you take of those comments by President Trump in the following Q&A session?
Well, it certainly shows the level of frustration that Donald Trump is feeling. I mean, he came into office saying he was going to get a very fast ceasefire between Russia and Ukraine, and months in, we don't seem to be making any progress towards that. He says he's had repeated phone calls with the Russian president. He thinks the phone call's gone well. He gets off the phone and he says Russia starts bombing Ukraine again. He says Russian President Vladimir Putin has fooled many people. It's unclear if he's including himself in that, but certainly you can see some frustration creeping in there. So two things that stand out from what he was saying. The first one is that he's talking about penalizing Russia economically. It's unclear what he means by secondary tariffs. Does he mean direct tariffs on Russia? The US and Russia don't do a lot of direct trade, so tariffs may not have a massive impact. Does he mean secondary sanctions on countries that are taking Russian products, particularly, again, China and India, who import a lot of Russian energy? So is he threatening to put penalties on countries that are doing business with Russia, particularly around the energy space? He says he'll give Russia 50 days for a deal. It's unclear exactly what he means by a deal, or he may impose some penalties. So there's a lot that's unclear from that, but certainly a sense that he's now dangling the idea of economic penalties on the government, the regime in Russia. And secondly, he's confirming that he will indeed provide Ukraine with what seems to be defensive weapons, primarily Patriot battery systems, to allow Kiev to better defend itself. And those would be paid for, though. They're not going to be given to Ukraine. Europe will be paying the US to provide those weapons, and Europe will send them on into Ukraine. So seeming sense of frustration there on all those sides with the progress or lack of progress he's making with Russia.
Okay, so that kind of gets into how he said the tariffs are not going to cost the U.S. anything. But he also didn't get much detail into the weapons itself. What type of weapons that the U.S. would send to Ukraine? Is that correct? Or maybe even when they would be delivered?
Well, he said they'd be coming soon, and the NATO Secretary General, he was with him, said that these could move quite quickly because there are Patriot batteries, it seems, in Europe that could be purchased and sent on relatively quickly. He talked about billions of dollars worth of equipment. But as you say, the key thing was he didn't really clarify if this would be just defensive weapons, again, that allow Ukraine to withstand Russian missiles and drone attacks, or whether it would be offensive weapons, which would allow Ukraine to keep taking some of the fight into Russian territory directly. We know Ukraine's been firing drones at Russia and looking to attack Russia on its own territory, and it's running out of those kinds of weapons, long-range missiles and so on. And would those be provided? Very unclear on that front, but it does seem it's at this stage likely more on the defensive side than anything else.
What type of tariffs, Roz, could this administration impose upon Russia? It seems like the wave after wave after wave of tariffs that have been put on Mr. Putin over the last several years haven't had much of an impact.
Well, that's right. So Russia is already heavily sanctioned by the US and by other countries, and looking to squeeze Russia economically and to squeeze their access to the global financial system. But that hasn't stopped Vladimir Putin in his war in Ukraine. His economy is on a war footing. We know there are weaknesses in the Russian economy, but equally for now, he's been able to keep going. The question is, for how long, given those cracks that we're starting to see in his economy? So further sanctions or tariffs or whatever you want to call it on Russian exports to the US, that's unlikely to have a major impact because there's not much that Russia is sending directly to the US. The real impact would be to come at countries, again, China and India primarily, who are buying a lot of energy from Russia, and that's giving Russia access to hard currency to fund their war in Ukraine. And if you penalize China and India for buying oil, for example, from Russia, that could have an impact. But that's the question of where we're unsure if that's how far Donald Trump is prepared to go. For now, he's threatening this. He's not actually saying he's going to impose it, but he's putting it out there in the conversation.
All right, Roz, thank you so much for joining us. Roz Matheson, Bloomberg News Director for Europe, the Middle East, and Africa. Let's get a little bit of a reset right here of these markets. We'll go to Charlie Pella with the Bloomberg Business.
Hi, thank you very much. Paul Sweeney recapping, resetting here. President Trump says the U.S. will send more weapons to Ukraine, describing them as, quote, top-of-the-line weapons and replacements. Trump also says the U.S. will impose 100% secondary tariffs on Russia if there's no deal in 50 days, and that the tariffs would not cost the U.S. anything. Markets, meanwhile, looking past the latest Trump threats, with the Dow, the S&P, NASDAQ all turning around since our last update. They are higher. S&P right now up 2. That is a gain of just under 0.1%. The S&P at 62.61. The Dow up 23, up under 0.1%. NASDAQ up 37, up 0.2%. 10-year 4.43%, with a 2-year 3.89%. Gold, little change, down 0.2%. 33.47 the ounce. West Texas Intermediate crude down 1.6%, 67.36 a barrel on WTI. So key takeaway at this are both gold and crude oil moving lower. Bitcoin, meanwhile, up by 0.5% at 119,760, have been flirting with 122,000. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you, Charlie. Tesla shares, they are higher this morning. They're up about 0.3%, but there was some news. Elon Musk said the company plans to poll Tesla shareholders on whether to invest in his other company, that's XAI. So here to break it all down for us is Craig Trudell. He's Bloomberg Global Auto Editor. Craig, I have to ask you, this is something that came out. I mean, what kind of message is this sending?
It's sending that Elon's business empire is becoming all the more intertwined. So this has been sort of a case on and off for years. We can think back to say the Tesla Solar City acquisition. and that's going back quite a ways. But in this case, it would be Tesla. His most valuable company investing in sort of his up and comer, and one where he's spent an awful lot of time and energy focused on lately, as Tesla's electric vehicle sales have been slowing. He's been really sort of dead set on taking on OpenAI and sort of standing up as a competitor to ChatGPT. And as with all the companies in this space, spending an awful lot of money to try and compete in that realm.
So where do we stand here in terms of kind of how investors are viewing their investment in Tesla? Are they invested in an auto company? Are they invested in an AI company? Are they invested just in Elon Inc.? How do they think about it these days?
Yeah, I mean, I think Musk has been trying for several years now to sell and position Tesla as much more than just a car company, right? And it's definitely in the energy space and has a battery business to show for that. And in AI, he's talked a big game about developing self-driving technology. He's not gotten there yet. As we've seen with the company, starting to offer rides in Teslas around Austin, Texas, they still have, Tesla employees in the front passenger seat to sort of take over in events where, the cars have not been able to handle, navigating the streets on their own. And yet with SpaceX, I think interestingly, for them to have just pumped $2 billion into XAI, I think there's a little bit of FOMO on the part of some in the Tesla shareholder base, where they've seen XAI go from not all that valuable a startup to suddenly an extremely valuable startup, and they feel like they've missed out on some of this appreciation and want in on that.
So with all that said, Craig, I mean, does Musk support a merger between XAI and Tesla, or maybe XAI and SpaceX? You mentioned SpaceX too.
He says he does not, and I think there's been talk about this for years, right? That on and off again, there's been questions as to whether or not Musk is sort of stretched too thin and doing too much. Would it make more sense to turn his companies into one and sort of think about it as sort of the General Electric of the new age, right? Which is kind of fascinating because, of course, that didn't work out too well for GE, and yet even some of Musk's own allies have sort of alluded to viewing him and his empire as sort of a modern day General Electric. So. He did take pains to say on X that he does not support a full-blown merger of Tesla and XAI, but he has, signaled on there multiple times now that he would be in favor of Tesla putting money in, and that's of course a proposition that could be helpful if XAI continues to grow its valuation. We should note, however, that our colleagues have reported just in the last month or so that XAI has been burning through about $1 billion a month. So this is a company that is really sort of cash hungry and needy as it's trying to stand up a business, with all of this capability.
Yeah, and Craig, it's been, I don't know, a month or two since Elon Musk left the U.S. government Doge. Is there any evidence that he is meaningfully engaging with Tesla?
I think he's messaging more about, sort of what Tesla's up to than he was while he was in Washington. He did also post just within the last day that, he was in Tesla's design studio and sort of hyped up how excited he was about what he saw. But, the company is sort of in this really sort of challenging state from a sales perspective. And you've sort of gotten indications that, well, maybe he doesn't necessarily fully have his finger on the pulse, in the sense that he told us just within the last few months that sales have turned around. A couple months later, the company reports that its vehicle deliveries had fallen 13% in the second quarter. So either he was, not necessarily up to speed on the state of sales, or perhaps he was more optimistic that they were going to be able to turn things around than they ultimately were able to last quarter.
Okay, Craig. Thanks so much for your reporting. Appreciate it. Craig Trudell is a global autos editor for Bloomberg News. He's based in London, joining us via Zoom here. And look at Tesla. The stock is down 22% year to date, but on a trailing 12-month basis, it's up 26%. So again, depends upon when you got into the stock, I guess, but clearly an issue. So for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up in just a moment. S&P 500 up 1 point, the Dow up 7, the NASDAQ up 40. That's about it. The VIX 17.13. For Lisa Mateo, I'm Paul Sweeney. This is Bloomberg.
Is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Cammie McCormick. President Trump is threatening tariffs to end the war in Ukraine.
You know, the secondary tariffs are very, very powerful.
Trump has set a deadline of 50 days for a deal to end the war.
We hope that's going to have an impact on Vladimir Putin, and we hope it's going to have an impact on Ukraine also. We want to make sure that Ukraine does what they have to do. All of a sudden they may feel emboldened, or maybe they don't want. You know, this is a very difficult situation.
Trump also announced more U.S. weapons to Ukraine, which NATO allies will pay for. CBS News correspondent Charlie D'Agata at the Pentagon.
By doing this from Europe, obviously, just look at the geography. It's much quicker, and that was pointed out in that meeting. They can move those weapon systems from European partners and then backfill those European NATO partners with U.S. systems.
Flames tore through an assisted living facility in Fall River, Massachusetts Sunday, killing 9 people. Wildfires continue to rage along the Grand Canyon's north rim. CBS's Ian Lee reports.
Melinda Rich Marshall, who works at nearby Jacob Lake Inn, had to evacuate quickly after a deputy called.
There is a door jam that catalogs all of the heights, right? You know, like your parents do. Well, it was my granddad that did that. So I just went and I took a video of it.
Roaring through another part of the North Rim, the Dragon Bravo fire destroyed the historic Grand Canyon Lodge.
New research shows cancer deaths linked to obesity have tripled over the past 2 decades. Wendy Gillette reports.
The study shows the increases in cancer deaths are particularly steep for women, older adults, Native Americans, and Black Americans. It evaluated more than 33,000 deaths from obesity-associated cancers, finding the highest rates were in Vermont, Minnesota, and Oklahoma, and the lowest rates in Utah, Alabama, and Virginia.
While layoffs are still relatively low in this country, Business Insider reporter Juliana Kaplan says there's plenty of paranoia.
There's this idea of, oh my gosh, the boss didn't stop to say hi to me. The office snacks are getting worse. There's a layoff coming. And we're seeing a lot of that tension coming from a few different forces. Obviously, you know, dread of AI hanging over everybody's heads. Am I going to get replaced by that?
That's especially true, she says, of white-collar jobs. Checking the numbers on Wall Street, investors have been following the tariff trade talks in the European Union. The Dow currently up 25 points. This is CBS News. special delivery in the Southwest, as Deborah Rodriguez reports.
A couple of police officers in Tempe, Arizona didn't want to leave someone waiting in vain for dinner, so after they arrested a Grubhub driver on a pizza delivery run, they showed up at the doorstep themselves, pie in hand. The department posted the video showing the woman thanking the officers profusely. And it was still warm. Tempe police say they're committed to serving the community 24/7, whether it's safety or pizza delivery. Deborah Rodriguez, CBS News.
A new AP poll finds most American teenagers prioritize graduating from college. 70% of girls and 54% of boys consider it important. Teens also see college as a key for good jobs and life skills. I'm Cammie McCormick, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
More American weapons are heading for Ukraine, and NATO is going to pay for it. Welcome to the Monday edition of Balance of Power. As President Trump makes the announcement alongside NATO's Secretary General, it just happened in the Oval, and we're going to get into this, along with the status of Russia's sanctions on Capitol Hill with Bloomberg's Laura Davison. Insights on the way from Max Bergman at the Center for Strategic and International Studies on exactly how this plan is going to work. The DOJ's handling of the Jeffrey Epstein case splits MAGA down the middle, as Joe Biden now gives Republicans a whole new reason to question the auto pen and the pardons. We're going to get into both with our political panel. Bloomberg Politics contributor Jeannie Shanzano is with us alongside Republican strategist Brittany Martinez. And we start, as always, on Wall Street. Let's get to the markets. The Monday trade with Charlie Pellet at World Headquarters in New York. Charlie, how's it going?
And right now we are hitting the ground running on this back-to-work Monday. Joe Matthew with the Dow. The S&P NASDAQ higher for now. Has been a choppy morning, but green on the screen right now. Stock traders are unfazed by President Trump's latest tariff threats. The S&P higher by 3 right now. Little changed at 62.63, a gain of just under 0.1%. The Dow up 47, up 0.1%. NASDAQ higher by 0.2%. 10-year 4.44%. The 2-year 3.90%. Spot gold down $11 the ounce, 33.44, down 0.3%. West Texas Intermediate crude is slumping 1.6%, 67.37 a barrel, and Bitcoin is now up 0.5% at 119,700 on Bitcoin. Fed Chair Jay Powell has reportedly asked the central bank's inspector general to review its $2.5 billion headquarters renovation. That's according to a report from Axios, as White House officials keep up the pressure on Powell to resign. Michael Darda is chief economist and macro strategist at Roth Capital Partners.
The hectoring from the White House is wholly unhelpful. I mean, even if the administration were to convince Powell to step away from the Fed, and this stuff about the construction project is just a fig leaf. It's pretty obvious what's going on here. It's completely out of line in my view. But even if you were able to convince Powell to step down and someone else takes over, it's a committee. They operate by consensus.
Michael Darda of Roth Capital Partners, and you can hear the full conversation on Bloomberg Surveillance. Sources tell Bloomberg Autodesk is no longer pursuing an acquisition of PTC, which would have ranked as one of the year's largest deals. Autodesk up 5.6%, PTC down 2%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to see you. Hope you had a great weekend, and welcome indeed to the Monday edition, and more specifically, the early edition of Balance of Power here on Bloomberg Radio, Satellite Radio Channel 121, Bloomberg Originals, and YouTube. Search Bloomberg Business News Live to find us on YouTube. We keep the stream up all day for our programming from Washington to New York and back again, with the president not wasting time in making some news today. And I'll let you know, lawmakers are coming back to town. There's going to be a lot of talk about sanctions on Capitol Hill as well as rescissions. And we'll get to all of that in a moment with Laura Davison. Today it's about Ukraine, and the president told you this was coming, right? We sat here Friday knowing that the president was planning a major announcement, as it was termed, on Monday. There were great questions about this, what this might include, and whether it would be offensive weapons. The answer is kind of yes. The news here really is more not just American weapons reaching Ukraine, but the fact that NATO is going to pay for them. This answers the question we were asking about whether there'd be a major emergency supplemental request coming from this administration, something we couldn't imagine, right? The idea of spending more money on Ukraine would go against the grain for this president. But he's clearly upset with Vladimir Putin, and he's found a new way to get American weapons in the hands of Volodymyr Zelensky. Here's Donald Trump from the Oval Office a short time ago, sitting next to the NATO Secretary General, Mark Rutte.
But we're very, very unhappy with him, and we're going to be doing very severe tariffs if we don't have a deal in 50 days. Tariffs at about 100%. I'm disappointed in President Putin because I thought we would have had a deal 2 months ago, but it doesn't seem to get there. So based on that, we're going to be doing secondary tariffs if we don't have a deal in 50 days. It's very simple. And they'll be at 100%. And that's the way it is.
Is there more gold in there than there was on Friday? Are you seeing this on YouTube? The gilding never stops in the Trump White House. Was that big gold eagle there on Friday? Laura Davison is our deputy bureau chief here at Bloomberg in Washington, D.C., and is, of course, helping to man all of our coverage here from the White House to the Capitol and back, and she's with us right now. Great to see you. They're adding to the gold as we go here, are they not?
There was a certain glow in that clip in particular.
My God, that was like Liberace's office. He did, by the way, mention the Resolute desk, which I guess has been cleaned up and returned. I've been waiting for the update on this. Remember when Elon Musk's son X, he drooled or something on they brought the desk out of the Oval. They were going to have it refinished, and I never heard that it came back.
And this is clear, even at the cabinet meeting on Friday, Trump was talking about the decor. He's been spending a certain amount of time picking different frames, picking different clocks, including stealing some, apparently, from the State Department from Marco Rubio.
This is, of course, not why you're here. We're talking about Ukraine, and this is really interesting, watching the evolution here when it comes to Donald Trump, Vladimir Putin, and this war, because it was just weeks ago he was talking about his great relationship with Putin. It was weeks before that he was yelling at Volodymyr Zelensky in the Oval, and it was weeks before that he predicted that he could finish this war on day one. What does he think at this point?
This is a total reversal, and even go back, even further. A year ago, he was talking about abandoning NATO partners. That really caused a stir on the campaign trail. Now you have a meeting in the Oval, a very cordial meeting with the Secretary General of NATO. He even mentioned that he's really become very friendly with this organization, especially at the NATO meeting a couple weeks ago. Part of this is that Mark Rutte has been very strategic in how he's courted this relationship with Donald Trump, and he's arranged this deal that Trump very much likes, that the U.S. won't be giving weapons, that they're going to be purchased through NATO and then given to Ukraine. This is very much the way he has always wanted to structure these deals going back to day one of his term. If he didn't want some sort of aid, he wanted some sort of financial deal. Remember, there was the rare earths deal that he was trying to cut. And this is, very much kind of where he sees kind of the role he wants to play of making these financial deals, these business deals, versus sort of a diplomatic solution.
It's like the military version of we're going to build a wall and have Mexico pay for it, right? He gets to do something that is maybe controversial, giving weapons to Ukraine, at least with his own base, but as long as we're not paying for it, we somehow don't have our fingerprints on it. Is that the idea?
Yes, and it also makes it an easier sell for Trump because he doesn't have to go to Congress and get them to approve additional money. It's not clear if Congress is going to approve this Russia sanctions package that has been debated for several weeks. These various versions of this bill have sanctions of 500%.
Right,
those are massive. Lindsey Graham has been talking about scaling that back, but the bill right now has pretty significant support, and it's possible, as Trump mentioned in the Oval Office earlier, that it could pass, in the coming weeks.
Even with the help of Democrats. It's interesting. I'm glad you mentioned that. In that that sound cut we just heard of the president, he's talking about tariffs. He's 100% tariffs. He means sanctions. That's what this bill is.
Yes, this is, and Trump seems to really be talking about two things. One, perhaps some sanctions that he would impose unilaterally in addition to whatever Congress decides to do. So he's talking about these 100% secondary tariffs, which we understand to be sanctions. These would be essentially levies on trading partners that buy Russian goods, so especially Russian oil. So this would be hitting other countries, essentially trying to further isolate Russia and further dampen any demand for their goods.
We've got a great conversation coming up a little bit later in the hour with Max Bergman at the Center for Strategic and International Studies, who's looking at what the effect would be here. And if you're a country like India, that could be a real problem if that's passed, right?
Yes, there's, especially if it's 100% or even forget 500%.
Right.
Those are tariff levels that just completely cut off, or sanction levels that cut off trade entirely.
So we're speaking about tariffs, and the president actually made news about tariffs over the weekend. He was asked about this, and I'm not sure it's even top of mind with the Ukraine stuff here, but he threatened another 30% on Mexico, USMCA excluded. We spoke to Peter Navarro here on Friday talking about Canada, 35%. That also is USMCA goods excluded. So these aren't terribly meaningful at the moment, are they? Doesn't that cover the vast amount of imports from both countries?
That really does. So it really lessens the scope there. And of course, Canada and Mexico are the U.S.'s largest trading partners. Though not far down the line is the EU, which has a 30% tariff rate, much to the surprise.
So that's the real news this weekend, right? Keep going.
Yes, yeah. That really came as a surprise because the U.S. has been in talks with the EU for weeks, if not months, about cutting a deal. The EU leaders at one point thought they were going to be able to keep that tariff level at 10%. Which, while wasn't their preferred outcome, would be a level that could support much of the trade that is ongoing. But at 30%, you have a lot of companies in the EU saying, "Look, this just doesn't. The math of these trade deals don't make sense anymore, and we're going to have to suddenly find other countries to export our goods."
Wow, the idea not to retaliate is pretty interesting here as well. Is this don't poke the bear or just give us time to cut deals with other countries?
I think the next 3 weeks will really be a key sign here. Do they get to August 1?
Yes.
And are they able to either, stave off that implementation, push it back a couple weeks, get a lower deal, or, is it August 1 and suddenly 30%? That's when you could really see countries start banding together, putting on some of these retaliatory tariffs and sort of daring Trump to, back down.
Your calendar must look like a riot. So we've got, what is it now? August 1 is the next deadline for reciprocal tariffs. We just dropped a 50-day waiting period on Russia sanctions, he said. I don't know why 50. We seem to be in 2-week increments. And didn't we already have something else we were waiting 2 weeks on here? What else is... What's the other deadline on your calendar right now?
We've got a lot of different things percolating between all the copper tariffs and all these sectoral tariffs. Those are all due at various points in the fall. One nice thing about that 50-day deadline for the Ukraine tariffs, that gets us past Labor Day. So people can enjoy their Labor Day vacations and then come back to Washington and deal with the next turn of the screw.
So, all right, I waited till the end to ask you this. I don't want to put you in an awkward situation, but I have to ask you about this Jeffrey Epstein story. The president talked about it last week. He called out the reporter for asking about it. You've got the deputy director of the FBI not showing up for work now, calling out the attorney general. Is this real, this MAGA split? Does it spill over into anything policy related that a Bloomberg audience should care about, or is this a tabloid story?
This certainly could mean, shakeups at the FBI and the Justice Department at the highest levels if, some of what we're seeing comes to fruition. And this is really sort of a cautionary tale of when you make promises, when you are not in government, to then you are suddenly in control of things, you control all the levers of power. If you get your side really amped up that something's happening, you have to be able to then, show something on the back end. So this is really sort of the insider-outsider dichotomy of, all these people from the outside were railing against government are now in key positions and you have to deliver.
There's a lot of tape on Kash Patel, Bongino, J.D. Vance talking about this list and how they're going to expose it. And those things don't go away automatically. I'll be very curious to see how they manage to do this. CC, I think you might be onto something there. Laura, it's great to have you back. Laura Davison helps to run our coverage here in Washington, our deputy bureau chief at Bloomberg, and always great to spend some time when we can pull her away from the desk. Producer James is back today. Did I tell you that? America's producer is back with us. And we'll have much more straight ahead as we consider the impact of these Russia sanctions if they were in fact implemented. Not just sanctions, but secondary sanctions that could ricochet around the world. Our conversation ahead with Max Berg at CSIS coming up on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average lower, little change right now, looking at a drop of just under 2 points, swinging between gains and losses, actually back in the green right now on the Dow, up 3 points. Little change, though. The key takeaway at this hour, S&P up 2 points, also little change. NASDAQ up now by about 0.2%. 10-year at 4.43%, with a 2-year that's currently yielding 3.89%. Gold is down $8 the ounce, 33.46, drop there of 0.3%. West Texas Intermediate crude down 1.5%, 67.41 a barrel, and Bitcoin now up by 0.2% at 119,403 on Bitcoin. A new destination for Southwest Airlines early next year. Southwest will be adding flights to St. Thomas, with service expected to begin in early 2026. And as we have been reporting, President Trump says the U.S. will be sending more weapons to Ukraine, describing them as top-of-the-line weapons and replacements. The president also says the U.S. will impose 100% secondary tariffs on Russia if there's no deal in 50 days. Our coverage continues on Balance of Power. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, thank you so much. From world headquarters in New York, the voice of Wall Street and the New York subway. Looking sharp in pink today, Charlie. Happy Monday and welcome to Balance of Power, the fastest show in politics, with big thanks to Cece Cherendoff, Justin Miller, and Elizabeth Sedrin for helping us out last week while producer James was off golfing. He's back with us today here in the nation's capital, and we were raring to go with news coming from the White House. We started early today, the Secretary General at NATO in the Oval Office. President Trump talking about Ukraine as promised. This is going to carry us largely through the day here in the news flow, as lawmakers in the Senate, Lindsey Graham and John Thune, for that matter, craft a sanctions package against Russia. The president's tapping the brakes on this. He says 50 days. Give Vladimir Putin 50 days to cut a deal, and then we'll talk about sanctions. That, of course, has been on the table for weeks now. The president even altering the language in that sanctions legislation before it ever sees the light of day. But it looks like the news today is about weapons specifically. That's why the NATO boss was in the Oval Office, Mark Rutte, sitting next to Donald Trump as he announced this plan, something we touched on last week. If you listen to this program, you might have seen this coming. A deal in which American weapons get to Ukraine, but we don't go to Capitol Hill and spend a bunch of money to do it. They'll be bought by NATO from the U.S., from U.S. contractors. In some cases, European countries will send their own weapons and we'll backfill them. But in the end, our NATO allies will pay for this. Here's Donald Trump speaking earlier about the Patriot missile batteries that are on the way to Ukraine.
It's everything. It's Patriots. It's all of them. It's a full complement with the batteries.
And when do you expect them to arrive in Ukraine, sir?
Well, we're going to have some come very soon, within days, actually. Because a couple of the countries that have Patriots are going to swap over and will replace the Patriots with the ones they have. And Matt will coordinate with NATO. But so it's going to be, they're going to start arriving very soon.
This was just last hour at the White House as we bring the voice of Max Bergman to this story, who is director of the Europe, Russia, and Eurasia program at CSIS, the Center for Strategic and International Studies. Max, it's great to have you, and I'm curious to hear more about your research into the impact of sanctions and secondary sanctions on Russia and other countries around the world. I wonder your thoughts initially, though, on this deal to continue providing weapons without going back to Congress with an ask. Is this a smart angle for the White House to get NATO involved financially, as we heard today?
Well, I think it's good news, especially for Ukraine. I think we should be clear about what the baseline here was. You know, the administration a week or so ago announced that it was going to suspend deliveries of Patriot missile systems to Ukraine. Now, these are vital to protecting Ukrainian civilians. And right now, it just looks like the White House is sort of turning that back on, and that future deliveries then are going to be paid for by the Europeans. But really, a lot of this money had already been paid for by the Biden administration. What we're looking at are just sort of the deliveries of future systems. But I think what it does represent is kind of a real shift in the burden of supporting Ukraine from the United States to Europe, where the Europeans effectively pay us to provide weapons that we were previously providing. At the very least, it is a good thing for Ukraine. Someone is going to pay for this. It looks like Europe. and that the supply of very precious Patriot missile systems will continue to flow to Ukraine, which is really vital for their security.
I'm glad you mentioned these Patriot missile systems. You used the word precious. How many of these do we have? Because when weapons to Ukraine were halted by the defense secretary and another official in the Pentagon a couple of weeks ago, that was the justification that we've run out of stuff like this.
Yeah, and part of it is connected to events in the Middle East, where the U.S. has used a lot of Patriot missiles, interceptors, to shoot down Iranian drones and other missiles. And every winter, it has been a big test for the United States about whether it could supply Ukraine with enough air defense to get through, because Russia started targeting Ukrainian power plants and other facilities. And there are some reports that the U.S. is really low in stockpiles, perhaps down well below 50%. And this is a big problem, and it's a big problem for our defense industrial sector that really can't produce enough. And there's just been big orders by the U.S. Army to try to ramp up production of these missile interceptors used by the Patriot system. So this is a problem. It has been a problem throughout this war, that not only does Ukraine need a lot, but that our defense industrial base and Europe's defense industrial base can't really meet the mark in terms of production.
Really makes you wonder, Max, how many years we are going to have this conversation for. It's just endless. And everyone seems to know that it's something that's badly needed, yet we never get down to actually increasing the capacity of the DIB, as they call it. I know that your expertise, though, is in the sanctions package that we're talking about. Your economic acumen here and the research that you've done is something that I'd like to ask you about, because sanctions are one thing, and that's another bit. Secondary sanctions, something else we talk about a lot, but we never quite get to. This was on the table for the balance of the Biden administration, but we're looking at some pretty hefty numbers here, whether it's 100% or 500%, Max. What would this mean for the likes of India or other countries doing business with Russia?
Well, it could be really significant. And, you know, the president is going about secondary sanctions in sort of a different way by using tariffs as opposed to sanctioning the companies or countries that are then are acting as workarounds for the main sanctions target. What's happened for Russia is that the Russian oil sector has been diverted to India and China in particular. And the United States has been very reticent, in particular, to sanction India. We are trying to develop close ties with India. We see India as a strong potential partner vis-a-vis China. And we've also been reticent in some ways to go after a number of Chinese banks and other Chinese entities. So I think, you know, with this tariff play, we'll see. It could have real ramifications, I think, for Russia's oil sector. But it would also have real implications for the United States bilateral relations. And the thing we have to remember is part of what the Biden administration was trying to do was to keep Russian oil on the global market. We wanted Russia to take a haircut in terms of how much profit it was getting in terms of sales, but we didn't really have a problem with Russia selling oil. We just wanted it to sell it at a haircut because we wanted Russian oil on the market to keep global prices low. The Trump administration, I think, is taking a bit more of a blunt approach, and so we'll see if this begins to really lead to a spike in oil prices.
What would this mean for China as well, Max?
Well, I think what we've seen is that China has means of retaliating. So it could lead to an escalation of the U.S.-China trade war, which has sort of already been rekindled. China has demonstrated its willingness to use rare earths and other things to hit back at the United States. So, you know, China does recognize that its oil dependence, its dependence on Russia as well as the Middle East, represents a real strategic vulnerability. It's part of the reason why they are going whole hog into renewables and clean technology. But for China, I think this could be really significant if the U.S. does impose this. And I think we would see China try to retaliate against us. So I don't think it would just be we set these, China stops buying Russian oil and moves on. I think it would try to find other ways of responding.
Well, so I guess what comes out the other end of the pipe here, if this is in place for some time, Max, are we on the phone with OPEC about how this is going to work, and what would it mean for crude oil prices?
Yeah, I think there's some real potential that we get on the phone with the Saudis and others in the Gulf states and say, hey, we want you to offset some of the shock that this could cause. We want you to open up the taps, put more oil on the market. We shall see if they do that. The Biden administration, I think, didn't feel that it had the political relationship to actually do that, and the Saudis, I don't think, were willing to. But with Trump, maybe it's different. I think the bigger, broader question here, though, is that Trump has not shown a lot of interest in trying to really stick it to the Russians, economically or militarily. He has not demonstrated in the past a lot of support for Ukraine. If that is shifting, the question is, how far does that shift? I think what we've seen is a partial shift. The U.S. is now, looks like it's going to continue military supplies, but there's no indication Trump is going to go to Congress, try to ramp up our production for Ukraine. And then the economic question is, how much of an economic hit is the president willing to absorb to stick it to the Russians in support of Ukraine? There's limits to what the Biden administration would do. So I do have some doubts about how far we are willing to go. And I think Russia may just try to call our bluff here. And then it'll be really interesting when the 50 or 60 days expire, whether that prompts sort of a strong U.S. reaction. But there could be a good outcome if we just simply get India to lower the amount it's buying, and maybe there's some way to negotiate something with the Indians to reduce the amount of Russian oil and other Russian military goods and things that it's purchasing.
That'd be very Trumpy, wouldn't it? You put 500% tariffs on the line or sanctions on the line, and in the meantime, you just crank back India a little bit to try to increase the pain, knowing that those sanctions were never going to take effect. Max, what happens over the next 50 days?
Well, I think what happens over the next 50 days is Russia keeps pummeling Ukraine. What I think we're seeing with the statement on especially the arms deliveries is simply the preservation of the status quo in terms of the West is going to keep supporting Ukraine and supplying Ukraine with supplies. Now, that's not quite enough, and Russia thinks it can win this war now and is going on another military offensive and has been going on a military offensive because it sees a light at the end of the tunnel of the U.S. sort of drawing back support. Now, what I hope happens over the next 50 days is that there's a ramp up on European efforts to support Ukraine militarily. I think that's happening. But then also that the U.S. begins to negotiate with India and perhaps even with China to reduce oil flows from Russia into India, and that maybe there's talks with the Saudis about offsetting any cuts to Russian supplies on the global market. I would hope to see that. I'm not sure we're going to see all of that, but I think we may see some progress perhaps with India. That's at least my hope.
There you have it. Remember this conversation in 50 days when this comes around. Max, it's great to see you. Thank you for the insights today. Max Bergman, CSIS. He's director of the Europe, Russia, and Eurasia program at the Center for Strategic and International Studies. Just a stable of smart people at CSIS who we tap on a regular basis here. Clarifying the remarks on tariffs versus sanctions here, Howard Lutnick, the Commerce Secretary, saying that it's economic sanctions. You can also make an economic penalty. If I catch you doing it, then you have to pay. You can do tariffs, you can do sanctions. Those are both tools in the toolbox. So I guess those are interchangeable now. You learn something every day on this program. We'll assemble our panel coming up next year on the fastest show in politics. I'm Joe Matthew. This is Bloomberg.
5:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are meandering ahead of big bank earnings tomorrow morning. Traders parsing Donald Trump's latest tariff threats send stocks wavering ahead of results from the banks. Also, inflation data tomorrow morning. The S&P right now unchanged at 62.59. The Dow, little change, down 24 points, a drop of less than 0.1%. The NASDAQ Composite Index up 43, up by about 0.2%. 10-year at 4.42% with a 2-year 3.89%. Gold down 0.2%, 33.48 the ounce, and West Texas Intermediate crude down 1.6%, 67.37 per barrel of WTI. Bitcoin now up 0.6%, 119,885 on Bitcoin. A downgrade this morning for J.P. Morgan Chase, Goldman Sachs, and Bank of America from HSBC analyst Saul Martinez. He says valuations are increasingly stretched after a rally in the bank stocks. Martinez spoke this morning with Bloomberg Surveillance.
Valuations are not attractive given still elevated macro concerns, and that is obviously one of them. I can't predict what tariff policies is going to be, but I do think the macro dynamics there is more risk than there typically is.
Among some of those bank names, J.P. Morgan Chase up 0.4%. JPM reports tomorrow morning. Goldman up 0.9%. Bank of America up by 0.3%. As you heard on Bloomberg Radio, President Trump says the U.S. will send more weapons to Ukraine, describing them as, quote, top-of-the-line weapons and replacements. President also says the U.S. will impose 100% secondary tariffs on Russia if there is no deal in 50 days. Recapping, the Dow lower, little changed. S&P higher, little changed. NASDAQ up by 0.3%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. The voice of Wall Street and the New York subway every day here covering the markets for us on Balance of Power. That's Charlie Pellet in New York. You can always find us, of course, on YouTube. You'd know Charlie when you saw him by going to Bloomberg Business News Live. Guidance pretty light for the president today. He took the meeting with NATO Secretary General this morning, and you saw and heard that live here on Bloomberg. He is now participating in a White House Faith Office luncheon with a very different conversation underway than the one he was having before. That might be all we see of the president on this Monday. Knowing that there's a big conversation going on behind the scenes right now about not just Ukraine, that's the one that's happening out in the open. The conversation about Jeffrey Epstein is hanging over this White House following a series of events that included maybe the longest Truth Social post I have ever seen that came out on Saturday night. The president referring to his guys and gals, asking them to calm down over all of this. And it goes, of course, back to last week. There's the Truth post. What's going on with my boys? And in some cases, gals, he wrote. They're all going after Attorney General Pam Bondi, who is doing a fantastic job, he says. We're one team, MAGA, and I don't like what's happening. Well, what's happening here is the administration's decision, and the DOJ more specifically, to not release paperwork on Jeffrey Epstein, what people thought would be a client list that was discussed openly by now many members of the administration. Prior to that on the campaign trail, Kash Patel, right? Dan Bongino, the FBI guys, J.D. Vance, the vice president, they all said that list has got to come out. Well, it's not coming out. And so fire has been trained on Pam Bondi, the attorney general, who Laura Loomer likes to call Blondie. And reportedly, Mr. Bongino stormed out of a meeting with on Friday and hasn't been back to work since. Now, this all goes back to an interview, or much of it, in this most recent chapter, to an interview that Bondi did on Fox News. Remember when she suggested that she had the list sitting on her desk? This was February 21. Listen.
The DOJ may be releasing the list of Jeffrey Epstein's clients? Will that really happen?
It's sitting on my desk right now to review. That's been a directive by President Trump. I'm reviewing that. I'm reviewing JFK files, MLK files. That's all in the process of being reviewed because that was done at the directive of the president.
Shortly after that, the binders went out. Remember the so-called MAGA influencers. They stood in front of the White House, in front of the West Wing, on White House grounds, holding up the binders, which ended up containing nothing new. And so there's a big question right now about what's going on, if the list even exists, whether this leads to resignations or firings, as we discussed earlier this hour with Laura Davison. Otherwise, this is a tabloid story, and there are a lot of networks to do that. We're curious if this impacts the lineup in this administration and therefore policy in the end. And so we assemble our political panel for their take on it. Jeannie is with us. Jeannie Shanzano, Bloomberg Politics contributor, senior democracy fellow with the Center for the Study of the Presidency and Congress. And with me here in Washington, Brittany Martinez, Espina & Company founder, executive director, Principles First, our Republican strategist. Ladies, thank you so much for being here and welcome. Brittany, I don't know what you're thinking about this, because it seemed inevitable, if these folks were elected, that this would come out. Is this a case of knowing too much when you realize what's really in there, or does this list not exist?
I love to be conspiratorial and say maybe. Who knows what that list looks like? But you can't make an absolute spectacle, bring influencers to the White House, which why do we even have political influencers in the first place? It shouldn't be a thing. When did being a practitioner become bad? And someone who's an expert in the field. So they bring all these weird political MAGA influencers. They do a spectacle with the binders, and now they're like, oh, just kidding, nothing. I mean, this is embarrassing. This is something that the president ran on, and they shouldn't, if they didn't know for sure whether they would have something or not, which I think we all speculated they probably have a little bit of something, you shouldn't have been out there like that on it. It's bad.
Well, the president went out of his way to shame the reporter who asked him about this in the cabinet meeting last week. Jeannie, what's your thought on this? Does somebody lose a job here? Bongino walked out of work. You're the deputy FBI director. You don't go to work on Friday. I don't believe he's been seen today. Or are we just talking about the wrong story? I'm trying to, and I'm asking you openly and honestly, our listeners and viewers can weigh in here too. Is this a story or not?
It is a story, and there's so many facets to it. But one facet is that this is sort of like Donald Trump's Frankenstein. He and the people he has worked with for years have inflamed these conspiracy theories. That's how he rose to prominence from many perspectives. And what did he do? He promised that once he was in office, he was going to unveil and make sense of what was happening behind the scenes with all these wealthy elites running these big, swampy institutions. And guess what? He gets in there and he says, oh, look the other way. Don't look here. Nothing to talk about. You mentioned, it's sort of disregarding the question by the supporter. This means something to these people. And this is the question I'm asked all the time. Why do these folks care? These people believed Donald Trump when he said there is an order to what is going on. There is an order to this world. Put me in charge and I will tell you all about it. I will let you in on the inside. And none of that is happening. And he's going to pay the price. Again, this is Donald Trump's Frankenstein. It does come back to bite you. And it's biting him hard at this moment. And I think this story is going to get bigger.
Well, there's a question about what comes next here, and Democrats might have the answer. You both probably saw this. Mark Veazey, a Democrat from Texas, introducing legislation now. It calls for the release of the Epstein files, saying that he will tie the corruption and cronyism of the handling of the Epstein case into a broader picture of Donald Trump's agenda here. Brittany, you worked in the House of Representatives. You worked for a former speaker. Does a bill like this ever see the light of day? I'm guessing no.
I probably not, since Republicans are in the majority, though it's going to get attention. I think that, like to Jeannie's point, I think that the story is going to continue to grow. If we have Democrats who are the opposition in this moment being able to push that narrative, it's weird. It's weird that they ran on something and now all of a sudden, very conveniently, there's nothing to share. And as to the point of, is there too much information? Listen, I'm not going to, speculate and be sued. However, as an American, when you've been telling me, Mr. President, that we're releasing the files, all your people are telling us their files are going to be out there, and all of a sudden you're giving us nothing. I mean, that's bad politics.
Well, you wonder if there is also, an instance or many instances where people, victims of assault, of abuse, may need to be protected, which is why you shouldn't promise to release a lot of things before
Absolutely.
you see them, right?
Yeah.
Jeannie, I'm going to come back around on you here because Joe Biden is in the news as well. We're doing all the dirty laundry in this segment here. Did you see he sat for an interview for the first time since winning the White House with the New York Times? Donald Trump calls the fake news New York Times, although he liked this story. It came up in the Oval earlier today, the question of the auto pen. So, Jeannie, Joe Biden in a phone call, and this was, I think, only a 10-minute phone call, pushing back on this idea that he had no idea what was being signed with the auto pen, and specifically with the pardons. Remembering there were like 4,000 pardons in one batch toward the end of his administration. He said he made every single one of the clemency decisions. The auto pen was used, quote, because there were a lot of them. But, Jeannie, he also did not, as it turns out, individually approve each name. These were categorical pardons that applied to large numbers of people. So he set the parameters, and then certain people fell within them. Rather than ask Mr. Biden to keep signing revised versions, I read in the Times, his staff waited and then ran the final version through the auto pen, which they saw as a routine procedure. Donald Trump calls this the biggest political scandal in the last 100 years. Jeannie, how do you react to this?
I think so many Democrats right now are shaking their head. This is very reminiscent of Joe Biden's tendency during the Harris campaign to come out at the most inopportune times. I mean, Donald Trump is having a bad few hours and few days. And what does Joe Biden do? Decides to give his first New York Times interview since he was elected to office. It's stunning. So it's not what any Democrat wants to see. And certainly it's the best news Donald Trump has had in about 48 hours. That said, I do think this is a potential problem for Joe Biden. We don't know how many former presidents have done this categorical approach to doing this, but that is not likely the way this is supposed to happen. People are tried in this country individually. They should, I believe, be pardoned individually and not categorically by staff members. So whether, I don't believe it's the biggest scandal in 100 years by any estimation, but I do think this is something that we deserve clarity on. Has it been done in the past? And going forward, how should it be done? Because categorical pardons seem to me to be a violation of a power given by the framers that's critically important and should be exercised judiciously and properly.
The idea of a categorical pardon, I'm guessing, would rub a lot of people the wrong way, although we did see, I don't know, was it not a categorical pardon when President Trump went after the January 6 rioters? That was kind of an en masse because he said it would take too long to go through each individual case. But let's stay with Joe Biden right now in this case. Brittany, does he have a problem here? And what is with Joe Biden's timing, constantly ready to light himself on fire when Democrats think they're ahead?
Just go enjoy your ice cream in Delaware, please. I'm not really sure why he thought this was an opportune time to come forward. I think there are a few concerns here. So one is that, well, first of all, auto pens exist. Presidents have used them, members of Congress have used them, but the way in which it's being used for these categorical pardons, that's the issue number one. The second issue is that because we are concerned about his potential mental decline. So that's issue number two. Ultimately, though, yes, to your point about the pardons in January 6th, we're not talking about that, but why was it okay in the case with President Trump and not with Biden? I'm not saying that I agree with what happened with Biden, and I certainly didn't agree with Trump on this one, but I think that Trump is known to be deflector in chief. So he doesn't want us to talk about tariffs. He doesn't want us to talk about the Epstein files. And so what does he choose to talk about? These auto pen things with
And Joe Biden showed up just in time to give it to him.
Perfect. Thank you. Yeah.
I mean, you couldn't write this stuff in advance.
No, literally, it's like an episode of Veep. Yeah.
It's an episode of Veep, which is a problem, Jeannie, if you're Joe Biden here. What has to happen with the auto pen? Does Joe Biden need to have Anita Dunn do an interview, or who was around him at the time that the president's talking about? Shouldn't they set the record straight?
You know, I do think that this is something, if you look at it, Article 1, Congress has oversight. They are looking into this. I don't think many Democrats or the people from the Biden administration feel comfortable with the way that is going. But that is really where the power rests of oversight. And I think we need clarity on this, not for the past necessarily for Biden's administration, but going forward, because there's one thing to use the auto pen to sign letters to school children or something along those lines. But when you're using it specifically in the pardons and they're categorical, that does raise questions. Again, this gets back to our judicial process, rather. What is justice? We are tried individually, convicted individually. You presumably are pardoned individually, not as a group. And Donald Trump should answer the same questions about January 6th.
I'm guessing James Comer isn't going to get Joe Biden up before the Oversight Committee anytime soon. We've got a great panel here. Brittany Martinez and Jeannie Shanzano. They'll be back in our second hour as we welcome our global television audience to the conversation. We're going to talk about rescissions, which may be morphing before our eyes. This effort to claw back already approved funding, that's coming up next, right here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump clears more weapons for Ukraine, but the U.S. will not pay for them. Welcome to the Monday edition of Balance of Power. As President Trump makes the announcement alongside the Secretary General of NATO today, while also delaying possible sanctions against Russia for some 50 days. I'm Joe Matthew alongside Kaylee Lyons in Washington, where Ukraine is our top story today. Kaylee, the president leaning into this story in a way that we haven't heard him yet.
Well, absolutely, as he continually is expressing frustration with Russian President Vladimir Putin. Not only is the U.S. now sending more weapons to Ukraine via NATO, which will actually distribute them and pay for them, according to President Trump, but ramping up potentially the economic pressure as well. That is, if a deal can't be reached in this 50-day window. If no such deal is reached, that's when 100% secondary tariffs kick in. Specifically, secondary tariffs, not secondary sanctions, were the words of the president.
Although it appears the administration might be using those words interchangeably, as we heard from Howard Lutnick in a chance to clarify that. It kind of sounds like the same thing. He might have meant tariff when he said sanctions, and then maybe there's no difference in their eyes. Either way, it's not a 2-week delay this time. It's a 50-day delay. And those weapons that we're sending, in some cases, will come from our European allies and will backfill their supplies. So there are a couple of layers here, and the complexities to this deal. It kind of reminds us of, we'll build a wall and have Mexico pay for it.
Well, yeah, that's a very good point. There's also the question of what this does to the congressional effort to enact more sanctions on Russia. That bill being spearheaded by Senator Lindsey Graham that would have 500% secondary tariffs on countries that are helping Russia. President Trump seemed to suggest that 500, 100, there's no real difference. They'll have the same effect.
Hard to tell how that all comes together here, but we're going to explore this coming up with some smart folks, including retired Rear Admiral Mark Montgomery. I'm looking forward to this conversation, Kaylee, not only about the weapons, the equipment, as President Trump likes to call it, used here, but exactly how this arrangement's going to work.
Yeah, so that conversation is coming up in just a few moments, but we begin, as always, with a check on financial markets. And for a look at that, we turn to Charlie Pellet up in New York. Hey, Charlie.
And a good day from New York. Trade, tariffs, sanctions, certainly very much in focus, helping drive today's sentiment. But right now, we're looking at the S&P very close to session highs, as President Trump says he is open to trade talks. The S&P right now pushing higher by 6 points, 62.66 where we stand. That is a gain of 0.1%. The Dow also higher by 24 points now, up by 0.1%. NASDAQ up 66, up by about 0.3%. Our Mag 7 index up 0.2%. The 10-year ahead of bank earnings 4.42%. The 2-year 3.89%. Gold lower little change, down 0.2%, 33.48. And West Texas Intermediate crude down 1.7%, 67.29 per barrel of WTI. Bitcoin now higher by 1% at 120,260. Have been closing in on 122,000 earlier in the session, but right now Bitcoin showing a gain of 1%. Sources tell Bloomberg Autodesk is no longer pursuing an acquisition of PTC, which would have ranked as one of this year's largest deals. Shares of Autodesk, they are gaining on that word, up by 5.6%. PTC is lower by 1.7%. Recapping, stocks higher across the board. The Dow, the S&P, NASDAQ all advancing as we continue to monitor any and all tariff or sanction developments. S&P up 7, up 0.1%. Back we go to Washington. Balance of Power continues now. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, I think the answer is both and. It's both sanctions developments and tariff developments potentially as we consider, obviously, the tariffs that the president is now threatening will take effect August 1st against various trading partners, including 30% for Mexico and Canada, but also the tariffs that the president is now threatening against countries that help Russia. Secondary tariffs is how he was phrasing this as he sat down in the Oval Office earlier today with the Secretary General of NATO, Mark Rutte.
But we're very, very unhappy with them, and we're going to be doing very severe tariffs if we don't have a deal in 50 days. Tariffs at about 100%. I'm disappointed in President Putin because I thought we would have had a deal 2 months ago, but it doesn't seem to get there. So based on that, we're going to be doing secondary tariffs if we don't have a deal in 50 days. It's very simple. And they'll be at 100%. And that's the way it is.
Indeed, when you look at the definitions for tariff and sanction, they are sort of different, but they are both, I guess, financial penalties. We can agree on that.
Economic leverage.
Economic leverage. He's pulling economic levers. Let's see if Kate Sullivan knows about this. She actually covers the White House for Bloomberg. Kate, we're just using these interchangeably here. We know, I think, what he's talking about. Kayleigh brings up a great point. We've got the weapons component here. That's a big deal because it would go beyond the drawdown that the president currently has. It would go beyond the summer. NATO pays for it. And we can certainly talk more about that. We will with the Rear Admiral in terms of what it is that they'll be buying. Right. But when it comes to sanctions, as Kayleigh asked, what does this mean for the effort that's underway on Capitol Hill? Lindsey Graham's got a bill that the president seemed to like last week. Does he still?
You know, it's really interesting. So one thing we heard Trump just say was, you know, I don't know if we're really going to need that, which I think is really interesting because he's not shooting it down. He's still open to it. But I think you heard him say, you know, if we do it this way with the tariffs or sanctions, you know, I know Lutnick was talking about how he's got these different economic tools in his toolbox. You know, these things in his toolbox, he would not need congressional approval for. So I think we're still waiting to see whether, you know, he's going to go that route, or it seems like he's still trying to keep all the options on the table. But it was interesting that he said, you know, we might not need that when it comes to what's going on Capitol Hill.
Yeah. Well, and he's essentially said once you get to 500, that incrementally doesn't make a difference. That 100 is still going to have potentially a similar effect in terms of the tariff rate. When we consider the countries that this is likely to affect, Kate, is the end target here China? Is it India, who, of course, is still trying to work separately on trade with the United States? Because he didn't necessarily get specific, but I'm assuming he's talking about purchasers of oil and gas from Russia.
Right. I think so. I mean, we still don't know. And so I wouldn't want to get ahead of that. I think we're still trying to press the White House to find out more details on, but I think that definitely could be part of this. I mean, I think there are a bunch of different angles here. And when it comes to just, you know, putting this pressure on Russia to end the war, because this is something that Trump promised over and over again on the campaign trail was something that he could do in 24 hours. And, you know, I think we've seen the frustration about how Putin has been handling this just really bubbling up over the last few months. And so I think definitely that could be part of this year.
You wonder how this potentially colors any trade deal that could be in the works with India right now, knowing that India would suffer greatly from secondary sanctions if, in fact, they were put in place. You've got an August 1 deadline, though, on India for reciprocal tariffs. I suppose that could move again. 50 days for Russia, so maybe they don't bump into each other. Is that something the White House is cognizant of?
You know, I mean, the short answer is I'm not sure. I think, you know, we're still trying to see how this is all going to play out and how this is going to affect. I mean, there's so many different deals that they're working on. As you mentioned, there are things that, you know, are threatened and then pulled back. There are moving deadlines. And so I think there's a lot up in the air right now. But what we did hear today from Trump, I think, was just a very, you know, clear message when it comes to increasing frustration with Vladimir Putin. A huge reversal. I mean, this weapons package to the deal, I mean, I think was just, it's so stunning to think that, you know, even just a few months ago to think that the U.S. would be providing more weapons to Ukraine, although, of course, that's not how they're framing it. It's that NATO is going to buy the weapons. And then, so I think the framing of it as a business deal is really important here because, you know, his base doesn't want to be sending weapons to Ukraine. And this is something that he talked about on the campaign trail so much. And to have it kind of structured as, you know, this is a business deal. We're going to make money off of this. And then this is really kind of NATO's problem now is just, I thought was really interesting and gave him a lot of political cover.
Yeah, I mean, he was very clear that the U.S. is not paying for these, that they are being paid for. Does that signal that as much as he may be growing increasingly frustrated with Vladimir Putin and with the fact that this war is still ongoing, that he does not yet find himself ready to be pushing Congress, say, for more actual assistance to Ukraine to be passed?
That's right. And I think, you know, up until now, all of the weapons and assistance that was being sent to Ukraine had been, you know, authorized under the Biden administration. And so there were no new weapons packages that Trump had approved that were going over there. So this is extremely significant because I think, you know, even though, you know, he's not ready to really own this. And I think the language that he was using today, you know, he was saying this is Biden's war. This is the Democrats' war. This is not a Trump war is very important because I think he's very aware of the perception that if the U.S. starts sending weapons directly to Ukraine, that he's, you know, gonna be hurt by that politically. He doesn't want to do that. He doesn't want to push Congress to do that. But this is, you know, a thing that, you know, we heard him talk about this last week, and it's been happening over the past few days with this rollout of this announcement. But It's just a really interesting and very Trump way to kind of handle this foreign policy, and I think is really colored by his also personal relationships with foreign leaders, with Rutte and with Vladimir Putin. His personal feelings when it comes to these people, I think, is playing a big role here too.
Never forget when he screenshotted the text from Mark Rutte before the NATO summit.
Yes, he
when
did.
Rutte was praising him. Just posted it right on True Social.
Daddy's
Kate
home.
Sullivan, who covers the White House for us here at Bloomberg, thank you so much. Shedding some light on the thinking, perhaps, from this administration around the weapons package that was announced today that NATO, of course, will be handling. Here's how the president phrased it in the Oval Office earlier.
It's everything. It's Patriots. It's all of them. It's a full complement with the batteries.
And when do you expect them to arrive in Ukraine, sir?
Well, we're going to have some come very soon, within days, actually. Because a couple of the countries that have Patriots are going to swap over and will replace the Patriots with the ones they have. And Matt will coordinate with NATO. But so it's going to be, they're going to start arriving very soon.
And we want to get more on these weapon systems that are going to be heading Ukraine's way, whatever the route is. Of course, this route through NATO, and turn to retired Rear Admiral Mark Montgomery, who's joining us now here on Bloomberg TV and radio. He's a former destroyer squadron commander, now senior fellow at the Foundation for Defense of Democracies. Admiral, thank you for being here on Balance of Power. When we consider these Patriot missile systems themselves, the idea that the U.S. will be backfilling countries that send these systems to Ukraine, how quickly can we actually do so? What kind of capacity exists in this regard right now?
Well, thanks for having me. You know, this is the real challenge. The president's language was a little non-specific, as was Rutte's, and conflicting. But I will tell you, we can get them there quickly through either of the two routes that were mentioned. The one route of the Europeans transfer their PAC-2, that's a lower level type of Patriot missile, to the Ukrainians, what the Ukrainians could use very easily, and then backfill and order them from the United States to refill the European armory, or the United States could transfer them, and then NATO pays, the European countries pay the United States for the United States to replenish itself. Either of those methods gets them there much quicker than a Ukrainian order from the from a defense industrial based country, which would be years. Either of these cases, he says, could be weeks to months to have missiles and batteries transferring to Ukraine.
Admiral, we're really glad to have you with us today, because before you were on the USS Nimitz, the USS McCampbell, the USS Elliott, the USS Bainbridge, and I can keep going, the Teddy Roosevelt, you were on the National Security Council at the White House, late 90s. And when we look back a couple of years here, how do we rationalize the fact that we've been having this conversation about our defense industrial base for decades, and we really don't have a greater capacity to show for it? Was this not something that you were talking about that many years ago inside the White House?
No, you're exactly right. I think we've got about a 20-year deficit, particularly in our munitions, and that's what we're talking about here, whether it's Patriot missiles here, the Standard missiles the Navy was using to shoot down Houthi rebel cruise missiles, or the offensive weapons that we were using against the Houthis or have used in other locales. We were running at about 25% of the proper level of munitions order. In other words, when we needed 4, we ordered 1. When you do that over 20 years, you really create a deficit. And worse, you tell the defense industrial base companies, I'm not going to do major orders. And they reduce their ability to produce. So what you've seen over the last 3 years are pretty consistent from the supplemental, the Ukraine supplemental, Taiwan supplemental a couple years ago, this year's budget and next year's budget. Actual investments in the defense industrial base, where the United States is contributing to defense industrial base companies like Lockheed and Raytheon and Northrop Grumman to expand their ability, their capacity to produce. They obviously contribute. And so we are beginning to grow our capacity. But this is a 20-year deficit. The only deficit that's worse is the European one, which almost went to 0.
Well, and now, of course, Europeans are trying to step up in their own defense spending category, which is one of the main aims of this administration. That was a point emphasized by Secretary General Rutte in the Oval Office with the president earlier. As we consider the kind of allied capacity, if you will, I also would like to ask you, Admiral, about Russia's capacity, and specifically the supply of weapons that Russia is still getting from countries like North Korea. How should we be considering Russia's ability to continue to replenish its own stocks, continue striking Ukraine, often civilian targets, and how it's matched against the assistance Ukraine is now getting in terms of air defenses?
Well, that's a great question, Kelly, because you're exactly right. Ukraine is fighting 4 countries: Russia, North Korea, Iran, and China. And in fact, Russia today is firing more artillery from North Korea than their own. In other words, the majority of the artillery being used by Russia is North Korean. North Korea gave about 6 million rounds, which is 20 years of U.S. production, to the Russians. Iran has built a Shahed drone factory in Russia. After giving them thousands of their own Shahed drones or selling them, they now have a factory there producing it. That's what's hammering the Ukrainian cities every night. And the third thing is China has been backstopping the economy with increases in imports and exports, but equally importantly, providing the microelectronics that are used in Russian cruise and ballistic missiles. So all 3 of these countries, as axis of authoritarians, are supporting the 4th, Russia, in this fight. And that's who Ukraine's been going against. So that's probably why it's appropriate for the United States and Europe to assist with at least with equipment, but not forces.
That's incredible to consider 4 countries. You know, Bloomberg interviewed the head of Ukrainian military intelligence admiral who said North Korea is now supplying as much as 40% of Russia's ammunition in this war. You mentioned the shells that we're having trouble manufacturing as quickly, but they're prepared at least to send a lot of other stuff. Ballistic missiles, artillery systems. Russia, of course, providing money and technology to North Korea in return. What's the weapon system you're most worried about? And could we see them include nukes coming from Pyongyang?
So, well, certainly not nukes, because, not that Russia would use them, but they have their own tactical nukes already. But I'm glad you mentioned that, because that's something we should always be sensitive to. But the North Korean thing, the North Korean weapons that bother me the most are, in fact, the artillery rounds. You're exactly right. But what bothers me even more than those are those Shahed drones. Shahed drones from Iran and the factory that was built in Russia are really putting pressure on the Ukrainian air defense system, and they're causing civilian casualties and damage to critical infrastructure. Energy, water, the financial systems of Ukraine are hit every night. And so, to me, that Iranian drone and that North Korean artillery are really making a difference in hurting the Ukrainians.
Well, and as you point to the targets that Russia is taking aim at in Ukraine, obviously part of the objective here, Admiral, is to wear on Ukrainian morale. Do you sense that we reach a point where that is effective, where Ukraine's kind of desire to keep prosecuting or defending itself in this war is going to diminish? Is Russia being effective in that regard?
So I don't think so. And here's why I say that. I go to Ukraine every quarter for a couple weeks to do training with their military and their general staff. And I am convinced the Ukrainians won't lose. That doesn't mean they can push Russia out. It doesn't mean they can recapture Crimea, but they won't lose. They're losing incrementally a kilometer here, a kilometer there of land. But they have the societal resilience to stay in this fight and win. They just need access to weapons, and that's what President Trump gave them today. He gave them access to weapon systems that they need. The one thing I wish he had gone one step further and given them access to some of our offensive weapons again, the ATACMS, long-range artillery. That would have been great, because then they could break up Russian formations when they're coming together in Russia by waiting till they're very close to the Ukrainian lines.
Yeah.
We want to stay in touch with you, Admiral. Let us know when you're going back to Ukraine. Retired Rear Admiral Mark Montgomery, Senior Fellow, the Foundation for Defense of Democracies. We thank you for the insights, only here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at the best level of the day right now on the S&P 500 index. Right to the numbers. We're up 10 now on the S&P at 6270. That is a gain of just about 0.2%. The Dow up 44, higher by 0.1%, while the Nasdaq Composite Index is up 81. For Nasdaq, a gain of 0.4%. Our Mag 7 Index up 0.3%. The 10-year 4.42%. The 2-year 3.89% ahead of bank earnings tomorrow morning. Spot gold down $6 the ounce, 33.49. Drop there of 0.2%. A retreat for crude. West Texas Intermediate now slumping by 2%, 62.12 a barrel. And Bitcoin up 0.9% at 120,139 on Bitcoin. Tesla facing a federal jury today. Tesla's on trial in Florida over claims that the company is partly to blame for a fatal 2019 crash that occurred when the autopilot system in a Model S allegedly failed to detect a parked SUV. Tesla shares, they're up 0.7%. And again, Bitcoin has breached $120,000 for the first time. Investor enthusiasm showing few signs of dimming as the House of Representatives prepares to consider key industry legislation. Again, bears repeating, we did see Bitcoin closing in on 122,000. Right now, Bitcoin 120,196. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Checking on all asset classes for us, but yes, noting those incredible moves in crypto with Bitcoin north of 120,000 just in time for Crypto Week in the House of Representatives. Or maybe it's because it's Crypto Week in the House of Representatives, Joe, is that those lawmakers are gearing up to vote on 3 separate pieces of legislation pertaining to the industry this week. They'll, of course, be voting to pass the Genius Act, which passed the United States Senate earlier, that will regulate stablecoins, specifically looking to pass the Clarity Act, which is a market structure bill, divvy up jurisdiction between the SEC and CFTC, and pass some anti-CBDC legislation as well. Crypto Week.
Yes. Don't you miss when she was hosting the crypto show? This is like the old Kaylee coming out. But I have to admit, you're the first person I asked when I walked in today, what the heck is going on? $120,000 is a really big deal. Wouldn't it be like us in Washington to really take credit for that? But there could be something to this here. The fact that it's being institutionalized on this level, you see Congressman French Hill doing Sunday morning TV talking about crypto. We're in a different world than we would have been a year ago.
Yeah, well, the whole idea is that especially if you get the regulatory clarity the industry has been pushing for years, that could open up all sorts of doors in terms of institutional appetite for cryptocurrencies if there's a greater clarity on the regulatory front. This is what they've been lobbying for.
That's for sure. You certainly hear a lot about that. We heard a lot of $1 million price targets floating around over the weekend, too. And this is the type of thing that gets that talk started. So let's get our panel together here today. We're going to get into the crypto week and also the rescissions package that's looming on Capitol Hill, whether it ever sees the light of day. We're going to ask Jeannie Shanzano about this, Bloomberg Politics contributor and senior democracy fellow with the Center for the Study of the Presidency and Congress. Great to have Jeannie with us alongside Brittany Martinez, Republican strategist, founder, executive director, Espina & Company, runs Principles First. And it's great to have you with us as well, Brittany. Jeannie, is this real? Is Washington really deserving of the credit for $120,000 on Bitcoin?
Well, you know, I think what's deserving of the credit is the enormous amount of lobbying that went into this bill. And you were just talking about this with Kaylee. I was looking back at the contributions that stablecoin and Bitcoin made in the last election to both sides of the aisle. It was one of the largest groups donating in 2024, and this has been the case for many cycles. And so I think what it reinforces is you give money to representatives and senators, you will get bipartisan support for legislation that you like. And that's what we saw in the Senate. And that's what we suspect we're going to see in the House. I don't know what it says about Washington, D.C., whether they should be trumpeting credit, but they took in a lot of money and they're delivering on those promises.
Well, and we should point out that this also was an objective for President Trump. He wants to see this legislation passing. He wants to be the most pro-crypto president in history. Brittany, when we consider, though, that this is not budget reconciliation, it's going to require Democrats to get this across the finish line, certainly in the Senate. What incentive do Democrats have, even those who might be pro-crypto, to cooperate with Republicans on this legislation, having just gotten steamrolled in the One Big Beautiful Bill Act?
I think you'll probably see pushback from Democrats, honestly. It's always going to happen, but certainly in an administration like this, to Jeannie's point, it's about follow the money. Are you getting donations from this? And it shouldn't affect the way that you legislate, but, we're in D.C. I think we know that it kind of affects the way that you legislate a little bit. And I think that crypto's here to stay. And so if Democrats, I think the one thing that might be able to sort of get them across this finish line is, do you want to help usher in this new age? Do you want to be innovative and part of this? And I think that might be able to sway some hearts and minds.
You wonder if it's important enough for Republicans to entertain this Democratic idea of kind of writing Donald Trump out of the industry, that there would be some sort of curbs put on his involvement, but that's not ever going to happen, is it?
I think, listen, this is the most Bloomberg-y topic I think I've ever talked about here when it comes to crypto. Yeah. But, Bitcoin and all of those fancy money terms with this virtual money and currency, we saw what I think are some very clear ethical issues when it comes to the Trump coin and all of those sort of things like that. And I think it would be smart for Republicans to say this is bigger than all of us and, maybe have him take a back seat on this. But no, this is a Trump show, and so I'm sure he'll be very much out in the front of this.
Yeah, well, we should point out that at the same time, it's crypto week for House Republicans. For Maxine Waters, the ranking member of the House Financial Services Committee, I believe she's calling this anti-crypto corruption week as she pushes this narrative, Jeannie, that this is an ethical problem, that President Trump stands to benefit potentially from this legislation financially. And I wonder if you expect that to be too big of a hurdle for many Democrats to get over, to get to yes on these bills.
I think it is the one thing that is putting pressure the other way on this bill. World, liberty, financial, everything else. By the way, I love Brittany's word, Bloomberg topic. I can't even say it, but it's a great word, great term. The reality is, though, they planned for this. They saw this coming. And that's why, again, look at the money, look at the contributions that went just in 2024. They'll go again in 2026. This has been ratcheting up for a long time across the aisle. And I think in the end, that will keep enough Democrats on board, despite concerns about ethics, which are incredibly real. I think that'll keep enough Democrats on board that this thing will get passed into the president's desk. I think it's an old story in Washington, and it is particularly troubling. One of the ironies here is, for such a new way of doing business and a new introduction into the financial world, something that only, my kids told me about and said, you should have invested in 2010 or whenever it started, which I never did. All of a sudden, they have made inroads into the oldest establishment in Congress, and they've done it the old-fashioned way. It's pretty telling, and it will probably be successful.
Wow, that's pretty good, Jeannie. Well, we talked about a bunch of deadlines earlier in the broadcast. We've got the 1st of August when it comes to reciprocal tariffs. Now Donald Trump has a 50-day pause or waiting period on Russia sanctions. There's another big one, Kaylee, July 18.
Friday.
That's when the rescissions package expires, Friday. So they have the rest of this week to claw back $9.5 billion that we've been talking about. And it's just not as easy as it is said, as it turns out here. Brittany, the idea of clawing back congressionally approved funding, whether it's NPR or USAID, PEPFAR funding, this is very controversial. Forget the $2 trillion that the Doge was going to cut. It looks like this actually might not pass in its current form and will have to be revamped. Is that how it ends?
I think there's a good chance here. This Congress has been nothing but surprising, so it wouldn't surprise me if it passed. It wouldn't surprise me if it didn't pass. Yeah. But what I will say is that, once again, we find the Senate, and especially Republicans in the Senate, pushing back, and they're sort of the ones who are going to be the deciders here. I know that Collins has some concerns, and the broadcast, I think that is going to be a big issue. USAID, I think those are going to be the top things that Republicans are looking at, especially senators who are representing rural areas where broadcasting is important, and we need to make sure that Americans know what's going on. And the last thing I'll say on this is that, I have the privilege to come and share my opinions sometimes and commentate on things, but I'm not a reporter. I'm not a journalist. And when I see Trump saying NPR and PBS and they're worse than the mainstream media, whatever, it just feels like not only is it a hit on freedom of speech, but free press. And so I think that's going to be a big concern for the constitutional Republicans that are in office.
Well, so Jeannie, knowing that those Republicans who may have those concerns are also being faced with the threat from the president directly to lose his support and endorsement if they don't get behind this, how do you think ultimately they all will come down?
I think it's going to be close. I think we will see, if this has a chance of passing, I do think we're going to see some changes on the public broadcasting because they can only afford to lose 3. And you have a number of rural Republican senators right in the wake, let's not forget, of the devastation in Texas when communication was such an important issue. How can they look at their constituents and justify cutting funds? And it's not a lot of funds, but cutting what little funds go to public broadcasting in those areas, which are for many people in those areas, their only lines of communication. I think USAID, we may see some changes. And then to your and Joe's earlier point, can they do this all and jam the House and get it passed into the president's desk by the 18th? It's going to be short. So I think the president is threatening. They want to get this through. Russ Vought is working as hard as he can. But this one, I think, is going to be close. My guess is we see changes out of the Senate. They try to jam the House. And we'll see if Mike Johnson has the magic touch once again.
No, the parliamentarian might have to have a say in this by the time they're done, which is something we're familiar with at the moment. Brittany, do you buy the conventional wisdom that if Republicans pass the rescissions package, a deal with Democrats on a budget is dead in the water because you've just eliminated whatever trust there was, and there isn't a lot right now?
I don't think there's a lot right now. You're right. It's Congress. I think that we're always speculating, whose side people are on and if they're going to be able to come across. But when it comes to that, I kind of, but I'm sorry. I feel like when it comes to this issue right now and what we saw, especially with the One Big Beautiful Bill, there's not a lot of goodwill at the moment. Right. And so I think Democrats are just going to vote party line as much as they can. And I don't think this is any different.
Mm-hmm.
Well, I wonder how the pressure of the government shutting down potentially changes the calculus there. Jeannie, before we let you go, as well as Brittany just mentioned, the One Big Beautiful Bill, of course, a round of budget reconciliation. Our colleague David Gura caught up with the budget chair in the House, Jody Arrington, in New York earlier today, who suggested he's going to try to do a second budget bill by the end of the year, a follow-up with some new reductions in Medicare, fix any errors from the first one. We know how hard the first one was. Do you really see the odds of a second being able to pass in 2025?
I don't know. Kaylee, strap in. We're going to do it all over again. I can't see them being able to do this all over again, but I think these were promises made to people uncomfortable with the bill. So I think they're going to give it a shot. I'm not confident it gets over the line, but we heard the same from Vought as well about the rescissions, where this is the first of what's going to be many. So I think these are promises. I'm not sure they're going to be able to keep them.
Well, we'll all find out together. Jeannie Shanzano and Brittany Martinez, our political panel, as we kick things off the week in Washington on this Monday. Thank you both so much for joining us. And of course, Joe, we've heard the speaker float that as well, that we could get more reconciliation packages. The question is just how hard fought those battles would be.
Ask Joe Biden how easy it is to get 2 swings at reconciliation in the same Congress. We'll talk more about this, of course, as we make our way through the day. And this idea that the walls are closing in on Jay Powell. It's intensifying what we're hearing from the White House. We'll have more on that next on Bloomberg.
140 on Wall Street. We do check markets all day long here at Bloomberg. NASDAQ at a record. S&P 500 index holding close to session highs. Stocks solidly in the green. Stocks bounced higher as President Trump indicated he is open to trade negotiations, including with the European Union. S&P right now up 10. That is a gain of 0.1%. The S&P at 62.69. Again, close to session highs on the Monday session. The Dow up 64, up 0.1%. NASDAQ at a record 20,661 now, up by 0.4%. 10-year at 4.42%, with the 2-year currently yielding 3.89%. Gold, little change, down 0.1%, $33.50 the ounce. West Texas Intermediate crude down 1.9%, $67.14 a barrel. And Bitcoin at 119,978 on Bitcoin, trading at a record, up 0.7%. America's biggest banks heading into earnings season with tailwinds from trading and lending as they benefit from market volatility and steady borrowing costs. Tomorrow morning, we hear from J.P. Morgan Chase, Citigroup, and Wells Fargo. All three higher right now. J.P. Morgan Chase up 0.8%. Citigroup is advancing 0.7, and Wells Fargo up by 1.1%. Again, recapping, stocks higher, NASDAQ at a record. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Okay, Charlie, thank you so much. Live from World Headquarters in New York, Charlie Pellet on the markets for us as we consider what's happening inside the headquarters of the Federal Reserve. This is not a market mover, at least not yet. But when you drive by the Fed building on Constitution and 20th Street, you see a bunch of orange cones and barrels out there. Kaylee, there's a barrier up because they're working on the building. They're rehabbing the building. And this has become the cause du jour at the White House. If you have a problem with Jay Powell, you have a problem with the renovations. This is something we heard about from the likes of Russ Vought and others. And now it's become a full-blown scandal here. I don't know if they want Jay Powell to be using IKEA or what's going to happen, but the idea is Russ Vought referring to it as Versailles, the millions of dollars that are going into the headquarters. They're calling for an audit against the backdrop of continued complaints about Jay Powell and his approach to interest rates. You certainly have heard enough about this from President Trump, who calls him too late Powell. He's called him stupid and other things in front of cameras and microphones. We spent some time with Peter Navarro, the president's trade advisor, who also thinks it's lights out for Jay Powell. Here's what he said.
I think the bond market, frankly, thinks Jerome Powell's a clown at this point because of what he did. And I can go over the three major mistakes he makes, but the bond market will do what the bond market does, seeing the data. And when you see 10-year yields going down significantly like they have been doing, that should tell Jerome Powell that the short-run rates should be coming down significantly. And that's not happening.
It's not happening, and it's not clear if it will happen and what the consequence would be for the Fed chairman himself as the White House is pushing this cut narrative, but also now apparently creating some concerns as to whether or not the Fed chair actually misled Congress about the cost and the scale of these renovations or rehabilitations, whatever you want to call them. So we wanted to get into this more with Amara Mokwe, who's joining us in studio here in D.C. She's Bloomberg Federal Reserve reporter. So Amara, as we know, there's kind of this legal question that we've been grappling with for months as to whether or not the president can actually fire a Fed chair. We know a governor can be removed for cause. Is this whole business with the building potentially a way to drum up cause?
It certainly seems like people in Trump's orbit are trying to lay the groundwork to argue that there is cause to remove Chair Powell from the Board of Governors. The question of whether a president can remove the chair is a little ambiguous, but the question of whether the president can remove a governor on the board is more clear in the law. If there's cause like malfeasance or neglect of duty, then that gives the president more standing. And you hear, you've heard one administration official, Bill Pulte, say that what Chair Powell said to Congress about these renovations because when he testified before the Senate last month, that he lied, basically. That's the allegation. And he's saying that would amount to cause. You hear Russ Vought saying that Powell has grossly mismanaged the Fed on social media when he was discussing these renovations. So the use of that language definitely suggests like people in Trump's world are trying to build this case for cause.
His term doesn't even go on for that much longer. I mean, by the time they got the paperwork to fire him, wouldn't he be leaving the building anyway?
His term doesn't go on for that much longer, and Trump has said that he doesn't want to fire Chair Powell. But the context that you all were talking about is very relevant here. This is a president and this is an administration that doesn't like Jerome Powell. They don't like him.
They nominated him in the first place.
Yes, Trump appointed him to chair in the first place, but the relationship now is in a very bad place, right? Powell and fellow policymakers have not delivered the rate cuts that Trump wants this year so far. They don't look like they're going to lower rates at their meeting later this month. Trump is angry, and so you can't separate where we are on this construction project from that anger and this full-scale pressure campaign that the administration has been waging on the Fed to lower rates.
Well, and the Fed is the point here, or more specifically, the FOMC. While Powell obviously has been the person targeted by the administration, he, while the chair, is only one member of that committee. These decisions are made in a group setting. So even if he does successfully get rid of him, that doesn't necessarily mean it's going to change the course of monetary policy.
That is true, but Powell has been he said recently that the Fed would probably be cutting by now, if not for tariffs and the potential for tariffs to drive up inflation. And so Powell has really been the face of this sort of on-hold stance, this face of let's be patient here on rate cuts. And so that's why Trump is so angry. And Powell is known to be someone who does have a lot of influence over the committee, who has been known to kind of be able to move the committee to kind of where he thinks they should be going. And so all of that plays into Trump's ire at Powell because policymakers have not adjusted rates so far this year.
Just to clarify before you leave us, in testimony, Jay Powell refuted what had been reported. He said there are no VIP lounges, there are no water features, there's nothing exotic that's going into the Federal Reserve building. Do we have any idea what they are building in there that's costing so much?
Yeah, the last sort of like big publicly available review of what they are building came out in 2021 from this National Planning Capital Commission. They reviewed the project and signed off on it. And a lot of this seems to be like a disagreement over how you want to label things, right? So like he was asked about rooftop terrace gardens.
Yes.
And the Fed has said, actually, those are like vegetated gardens on the roof, which are good for like sustainability and like they're environmentally friendly. So like a lot of it seems like how angry are you at Powell, and do you want to like sort of cast some of these things that's overly extravagant?
In the eyes of the beholder.
Exactly.
Wow,
Exactly.
fascinating.
Yes.
Amara, thank you so much. Amara Mokwe, Bloomberg News Federal Reserve reporter. As we try to get to the bottom of this one, maybe we can get a tour, Kaylee. I kind of want to see what's going on in there. You mentioned tariffs, though, Kaylee, and indeed, Jay Powell has indicated that if it were not for the tariffs that the president has on again, off again, recently adding to over the weekend, that maybe things would be in a different position when it comes to moving rates. And we want to explore this a bit more with Jacob Funk Kierkegaard, non-resident senior fellow with the Peterson Institute for International Economics. Jacob, welcome back to Bloomberg TV and radio. Do you suspect that that is true, that if the tariff policy were at least more predictable or not there to begin with, that Jay Powell would have much more flexibility to start lowering rates now?
Oh, yeah, I would certainly say that the inflationary, the sort of projected path for inflation in the United States would be significantly lower. And that would quite naturally correspond into more freedom for the Fed to cut rates. No doubt about that in my mind. It is possible that, firms front-loaded a lot of stuff ahead of the early April deadline. They may even be eating it initially through their margins, but none of that is sustainable. So I think, I'm on the team that thinks inflation is coming, unless.
Well, and I guess we'll get a sense when we get U.S. CPI data tomorrow as to whether or not it is starting to feed through into inflation, knowing that higher tariffs still could be coming just weeks from now, Jacob, as August 1st, of course, is the new deadline we're working with. And the European Union specifically is now being threatened with a 30% tariff on that date. The EU's trade chief, Maros Sefcovic, says that effectively would prohibit trade between the U.S. and EU. Do you view that the same way?
Yeah, I think that's true. I think that, even if the 30% do not necessarily include the categories that are already affected by sectorals, that would be autos and steel and aluminum, there'll be a very, very large amount of trade that simply won't be profitable at a 30% tariff. So what this will do is that it will greatly diminish the overall amount of trade that is done. And I think importantly also what that means is that Trump's threat to match any possible EU retaliation to those 30% probably is not very influential for the EU because the initial hit to trade has already been so large. And therefore, it's not a particularly effective deterrent, in the eyes of the EU from its retaliation.
So should we start stockpiling wine and cheese now?
Well, I think yes is the short answer. If you believe that the prospects for a deal are much lower today than they were last week, I am certainly in that category. I think the EU quite clearly have interpreted the 30%, which is obviously much higher than the initial April 2nd 20%, as kind of a slap in the face. And basically, using the EU's, and I think honest attempt to get a deal as a sign of weakness and as therefore an opportunity to squeeze the EU even more. Once the prospects of some framework of a deal agreed between the EU Trade Commissioner, USTR, and the Department of Commerce reached the White House. So yes, I think the probability, unfortunately, of a no-deal scenario today is higher than last week. And yes, that probably means that you should at least think about stockpiling stuff you'd like from Europe.
Well, it also raises the question of where Europe would turn if trade was effectively cut off in at least large part with the United States. As European officials, Jacob, are now talking about this idea that it will increase engagement with other countries that have been affected by U.S. tariffs. Could the end result of this actually just be a reorientation of the global trading system away from the United States and actually more toward countries like China?
I don't know if more towards China, given that trading with China, certainly from the EU's perspective, today is a very unbalanced, endeavor as well. But no doubt that the EU is very strongly pursuing, deeper trade ties with quote unquote third countries. This weekend we had the political conclusion of an EU-Indonesia free trade agreement. The EU is also plowing ahead with the potential free trade agreement with India, as well as other members of ASEAN, Thailand, Malaysia, and others. They have obviously recently struck deals with Mercosur in the better part of the South American economy. So absolutely, I think what you are seeing is that countries that still believe in the benefits of free trade, they're going to trade more with each other and less with the United States. Maybe also less with China because of the risk of Chinese overcapacity and sort of excess export growth. But among themselves, absolutely, that's what we will see, which ironically is something that, maybe the Trump administration actually wants at some level by levying so high tariffs on so many U.S. trading partners.
What do you make, Jacob, of the decision to not retaliate? Ursula von der Leyen says there won't be any retaliation ahead of the deadline on August 1st. Is it smart not to escalate?
I think if you're the European Commission, it's a smart move. Because remember, if there is retaliation, this would be by far the largest trade retaliation in European history. The cost of that will be borne by the member states. So if there was any doubt about who wanted that trade escalation, if the Commission could in any sense or shape be accused of being escalatory or hawkish in these negotiations, there'll be a lot of incoming fire headed to the European Commission and Ursula von der Leyen from member state governments. So she's basically insulating herself from doing that by saying, look, we want to make sure that if this comes to a trade war, it's Donald Trump that fires the first shot, not us. So yes, I think it is smart. And obviously from a European point of view, because, Europeans view tariffs as a bad idea. And if you do that, of course, you should use any possible option to avoid it. So absolutely, yes. Keep negotiating until 11:55 p.m. on August 31st.
All right, Jacob, we appreciate you joining us. Jacob Funk Kierkegaard, non-resident senior fellow with the Peterson Institute for International Economics, joining us here on Balance of Power. And we're out of time, Joe. Otherwise, I would have asked Jacob what the difference is between secondary sanctions
and tariffs.
Secondary tariffs. We're going to have to explore that more, I guess, in the late edition.
Kaylee's asking this because they appear to be interchangeable today at the White House, even though they are kind of very different. We'll explore this more, by the way, with Libby Cantrell's going to be on the late edition of Balance of Power. That starts at 5 p.m. Eastern Time. We'll meet you back here with much more from Washington, only on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone, live from the Bloomberg Business Week studio in New York. We're on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week Daily. I'm Tim Stanovic. That is Nora Melinda. She's Bloomberg News equities reporter. She is in for Carol Masser on this day, Nora, where we're seeing a little bit of a, I guess you could say, relief rally in equities.
Yeah, I mean, we're seeing some of these indexes up a touch. We have communication services, the best performing sector. Energy, the worst performing sector right now in the S&P 500.
Charlie Pellet's going to have a deep dive in just a minute. In the meantime, we've got our eyes on pretty much everything that's moving markets this afternoon. We're going to start talking about trade because the president indicated he's open to trade negotiations, including with the European Union. Also, it is a busy week. We've got results from the big banks. We're going to get inflation data. And then there's everything happening when it comes to geopolitics, Nora. And that's where we're going to begin with the latest when it comes to Russia's invasion of Ukraine.
Yeah, lots to really focus on here, lots to parse that I'm really keeping an eye on, and we can definitely tell that Wall Street is doing the same here.
The president threatened to impose stiff financial penalties on Russia if it does not end hostilities with Ukraine. Angela Stent is going to be joining us in just a few minutes. She's of the Brookings Institute, and she's standing by right now.
And speaking of financial penalties, what investors need to know about the latest tariff announcements against Mexico and the EU.
Also on those tariffs, how one S&P 500 company is navigating them. We've got the CEO of Fastenal joining us in just a few minutes. All that and more coming up this hour on Bloomberg Business Week Daily. First up, a check of the day's trade and top business stories. Here he is. Hey, Charlie Pellet.
Hi, thank you very much, Tim and Nora. We have got the Dow, the S&P, NASDAQ, all advancing. S&P 500 index holding close to the best level of the session, up 9 right now, up 0.1%. But NASDAQ trading at a record right now. The NASDAQ Composite Index up 64. Right now, NASDAQ 20,649, up by about 0.3%. The Dow up 53, up by about 0.1%. 10-year 4.42% for the 2-year ahead of bank earnings, 3.89%. Gold little changed and lower, down 0.1%, 33.50 the ounce. West Texas Intermediate crude down 2.2%, 66.97 a barrel on WTI. Bitcoin back above 120,000 right now, trading at a record today, reaching that level for the first time. Bitcoin up by 0.7%. Meta Platforms CEO Mark Zuckerberg says the company is building several massive data centers to power its AI efforts, with the first one expected to come online next year. Right now, Meta up by about 0.8%. As we have been reporting, President Trump says the U.S. will send more weapons to Ukraine, describing them as top-of-the-line weapons. And according to the New York Times, Andrew Cuomo will stay in the race for New York City mayor to challenge Mamdani. Recapping, S&P up 8, up 0.1%. NASDAQ at a record. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Certainly do appreciate it. President Trump threatened to impose stiff financial penalties on Russia if it does not end hostilities with Ukraine. That's within 50 days, while pledging fresh weapon supplies for Kyiv. Trump said the levies would come in the form of secondary tariffs without providing details. The president has used the term in the past to describe duties imposed on countries for trading with American adversaries. Angela Stent is senior fellow at the Brookings Institution. She's also the author of Putin's World, Russia Against the West and With the Rest. She's a former national intelligence officer for Russia and Eurasia at the National Intelligence Council. Also served in the Office of Policy Planning at the U.S. Department of State. Angela, good to have you with us this afternoon. Secretary Lutnick followed up afterward. He said it would be a secondary sanction, or secondary sanctions, I should say. What exactly does that mean for a country that has had sanctions on it for years?
So the actual tariffs or sanctions on Russia wouldn't mean very much, tariffs, because we barely trade with Russia. I think $5 billion last year. But what that would mean is sanctions on China, sanctions on India. They're the two largest purchasers of Russian oil. Probably a country like Turkey as well, which purchases a lot of Russian oil. So they are threatening those countries. I believe that President Trump said 100% tariffs. There's a Senate bill which would impose 500% tariffs, secondary tariffs on these countries that purchase Russian hydrocarbons. So that's the real threat, not so much to Russia.
Angela, how meaningful would it be for these countries?
So, it would be meaningful because they are the largest purchasers of Russian oil. But then we don't know how they might retaliate. India, of course, is a country that's being drawing closer to the United States. So to have that kind of tariff on India would also, I think, affect other aspects of the U.S.-Indian relationship. So I think they're kind of all waiting. I should say that, saying that Russia has 50 days to end the war, you have to realize that Russia is now in the middle of a very brutal summer offensive. And if you give them 50 days, the summer will be over by then. So Russia can still do an enormous amount of damage to Ukraine in those 50 days.
Well, in terms of moving the needle on actually ending this conflict, Dr. Sten, is this enough in your view to actually push Russia to stop its bombardment of Ukraine?
Well, the most important thing at the moment are the weapons supplies. I mean, the Ukrainians desperately need air defenses. They need those Patriot batteries. And today, President Trump said that there's 17 of them available. So what's going to happen is European allies are going to purchase American Patriot missiles and other weapons. They are then going to give them to Ukraine. So that enables President Trump to say to his base, well, we're not spending any more money on Ukraine. Whether that's enough to help Ukraine really give the message to Putin that he cannot win this war, I think that's doubtful. I mean, Putin's not going to stop until he really believes that he's not going to win this. And for that, the Ukrainians need an enormous amount of weapons, including, in the end, weapons that could strike Moscow. But we haven't said that we're going to provide those yet.
Well, let's listen to exactly what the president said earlier. Here he is in the Oval Office with NATO Secretary General Mark Rutte.
Where we're going to be sending them weapons and they're going to be paying for them. The United States will not be having any payment made. We're not buying it, but we will manufacture it and they're going to be paying for it. This is a very big deal we've made. This is billions of dollars worth of military equipment is going to be purchased from the United States, going to NATO, etc. And that's going to be quickly distributed to the battlefield. Ukraine will take it up. And, say what you want about Ukraine. When the war started, they had no chance. And they still would have had no chance if the equipment, they had the best equipment. Because we do make the best planes and missiles, and we make the best military equipment in the world by far.
That was President Trump. Earlier today, he was in the Oval Office with NATO Secretary General Mark Rutte. Dr. Sten, I want to talk about the weapons portion of this and the significance that you see in an environment where many in the Republican Party were happy not to provide Ukraine with any aid. How do you view this politically for President Trump, and also whether or not you think this is enough of a move by the United States? And again, the president saying the United States is going to provide them, NATO member states are going to pay for them. If that's enough to give Ukraine the edge against Russia?
Well, so first of all, this certainly has split the MAGA base, because there's still significant numbers of people, beginning with Vice President Vance, who think that we shouldn't be supplying Ukraine. And then you had the Undersecretary in the Defense Department, Elbridge Colby, apparently order the end of supplying Ukraine with weapons because he thinks only the Europeans should do this. President Trump reversed that order that apparently he hadn't heard about before. So yes, I think this is still a contentious issue within his base. Is that enough to help Ukraine? I mean, Ukraine just needs an enormous amount of these Patriot batteries. If it gets 17 extra ones, that's terrific. The Ukrainians themselves are manufacturing their own drones now. They are also making deals with European countries to co-produce them. But we really don't know whether that is enough, because the Russians are also stepping up their production of weapons. And they're also using their drones in very creative ways to try and get around some of the barriers that the Ukrainians have put in their way. So at the moment, things are very difficult for Ukraine. And I think only very significant numbers of weapons can help them push this back. And they also do have a mobilization problem. Russia has many more people it can mobilize. It's got North Koreans fighting for the Russians. The Ukrainians do face this shortage. They are so far refusing to draft 18 to 25-year-olds, but they are under pressure from some of the Western countries to do so.
Angela, we saw a report last week that North Korea is supplying as much as 40% of Russia's ammunition. Just how much of an asset is this for Russia?
oh, North Korea is an enormous asset for Russia now. We now hear they may send as many as 30,000 more Korean troops to Russia to help, and with the ammunition. So without North Korea, it would be very difficult for Russia to do what it's doing. Iran is less important now, by the way, because the Russians are producing their own drones. But I would say the single most important country in terms of weapon supplies right now is North Korea.
Dr. Angela Sten, we always appreciate you taking the time and joining us on Bloomberg Business Week Daily. Dr. Angela Sten is Senior Fellow at the Brookings Institution, also the author of Putin's World, Russia Against the West and With the Rest. So that's the latest out of Washington when it comes to Russia and Ukraine. Now let's get to trade, because President Trump indicated that he's open to more trade negotiations, including with the European Union, even as he insisted that his letters threatening new tariff rates are, quote, the deals for U.S. trading partners. Josh Wingrove is a Bloomberg News senior White House correspondent. He joins us from our bureau in Washington, D.C. Josh, I want to start with Europe, because I think the big news over the weekend was the idea that the European Union would see a 30% tax or 30% tariff on goods from the country. Obviously, a big deal for a very big trading partner. The president somewhat walking those comments back a little bit, or at least saying he was open to negotiations. What's your read?
Yeah, these letters have been a bargaining tactic, and that one landing in particular in the middle of what have been negotiations between the U.S. and the EU. And that's important because other letters to smaller economies have not really, been that circumstance. They've been maybe token negotiations at most, and the letters seem to be, the last word, or at least one of the last words. So Trump is in some ways trying to set a number, but also invite these negotiations. He's also using these letters, of course, to invite direct investment. Of course, that's going to be not particularly compelling for countries to try to facilitate if they feel like there's a gun being held to their head. So, the EU is, of course, one of the major U.S. trading partners, a lot riding on this one. And the question is, of course, will they land somewhere, or will Trump look at wherever they are in a week or two and think that that's either not enough and stick with the 30%, or it is enough and go to a lower number? Remember, of course, the baseline number right now is 10%. He initially announced 20% on Europe in those initial Liberation Day tariffs. He's threatened as high as 50% on Europe, and is always, that's been kind of one of the top of the list places that he's complained about when he talks about unfair trade relationships. I should note, of course, he posted in the last day or so a complaint that he continues to think the U.S. is being taken advantage of militarily as well as economically. That's a comment to be read in the lens of the EU talks, the Canadian talks, the Japanese talks, the South Korean talks. Trump sees all these things kind of commingled, and some of them they've been publicly resistant to talk about touching, like those sectoral tariffs. So, he's trying to get deals. He doesn't want to really negotiate on some of the things that these other places negotiate. It's tough sledding ahead.
Josh, the EU is definitely a big major trade partner indeed here, but who's really making the most progress here? Is President Trump pulling ahead? Who seems to be budging, if at all, in this tariff war between the two countries?
We don't know, because the EU has been leading the way in terms of countries that have not retaliated, but can. I mean, there's a lot of U.S. goods sold to Europe that could face tariffs. Trump is mad about the trade deficit, but of course that is a two-way street that he's talking about. And I think the question here, and we have some reporting from some of our colleagues in Europe, that there are at least some voices wondering whether there should be increased collaboration between some of the Western economies that are all facing similar U.S. threats. Is, do they ultimately all get to a deal, or do they ultimately all decide to push back more than they have already? And right now, that is just such an open question. Remember, early on, particularly with China, you saw like tit-for-tat responses from some places that really sort of sent things escalating to effectively trade embargo level tariffs. We haven't really seen that yet, but that doesn't mean that we won't get there. And remember, Trump's threats are so angering people and voters in these other economies and countries and blocs that the political will to bend the knee versus to fight back might become a big factor here at some point. So we just don't know yet where it's going to land with the EU. Remember, some of these tariffs are coming on August 1st. That includes the EU, that includes Canada and Mexico from their letters, even though they weren't facing the same timeline. China remains a big outstanding question. They're not facing that same deadline, but are facing a different, softer one later in August.
Josh, are these tariffs legal? And I ask that in the context of Brazil, for example, because you mentioned the president and he's made his disdain for trade deficits known, but we have a trade surplus with Brazil, and ostensibly, a lot of these tariffs fall under IEEPA and the Emergency Act that that gives him, and I'm wondering if these will hold water in the court of law.
The Brazil one, of all of them, is the biggest stretch, I think. I mean, I'm not a lawyer, but Trump's position is that the United States Emergency Economic Powers Act allows him to tariff 50%, to tariff Brazil 50% because of a prosecution going there on one of his allies. I mean, it is just such a stretch, so much a stretch that the bottom of that letter includes Trump saying he's going to launch a 301 investigation, which, even if that investigation proves to be a fig leaf, does give him stronger legal authority to impose Brazilian tariffs. In other words, he's giving himself a second option, which is, of course, a tacit acknowledgement that the first option isn't all that much of a guarantee. Now, the trade-off there with 301s is they take time, months, several months usually, to enact. So August 1st, he might try to impose those on Brazil, but that is definitely the one that's a stretch. The legal battle over the more broader use of IEEPA, remains. He does have other avenues. Section 338 jumps to mind. He is, of course, continuing to pursue Section 232 powers. The administration has basically said tariffs are going to come one way or another if they don't get their way in court, and that they'll fight this all the way to the Supreme Court if they have to. So we'll see where that goes, but you're absolutely right that there is certainly an open legal question here, or at least that is what every analyst is telling us. But in particular on that Brazil one, that's why I think you might see them pursue that 301 path to give himself a fallback.
Just quickly here, Josh, can we talk a little bit about Mexico? How key is Mexico in terms of the U.S. trade ecosystem?
Huge. And I think some of the news on the weekend that I want to make sure people caught was that our reporting is that the USMCA exemption for trade from Mexico will continue, even if Trump proceeds with that 30% rate. Same deal for Canada. So that is a bit of a change of tune. Trump was interested in really broad tariffs on both those countries in the first hours, if not weeks, of his administration. Now they're saying, look, we're going to have a higher top rate on both Canada and Mexico, 35 and 30% respectively. But they're going to continue that exemption for USMCA compliant goods. Remember, that's the new NAFTA that Trump renegotiated in his first term. These are huge, huge, huge trading partners, not just sources of imports, but huge buyers of U.S. goods. So continuing that USMCA carve-out, Trump's aides always say he hates the word exemption. I bet you they're not trying to use that word around him when it comes to USMCA. But using that carve-out, or whatever you want to call it, extending that, really narrows and constrains the impact of his tariffs on Mexico and Canada, his threatened ones at least. But when I mentioned countries that had not yet retaliated, Mexico and Canada are among those. And I think that if Trump is unable to reach a deal and does ratchet up some of those tariffs on those, even in a constrained way, those countries will face questions internally about whether they should respond or not.
Mexico, Canada, the European Union, Brazil, we did it all with Josh Wingrove. We went around the world with Josh Wingrove. He's Bloomberg News senior White House correspondent, joining us from our Washington, D.C. bureau. Thanks, Josh. Coming up, it's a new record today for Fastenal after the company reported earnings. We got the CEO next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ at a record. The S&P 500 index holding close to a record right now. The Dow, the S&P, NASDAQ all trading higher. S&P up 10 to 6270. That is a gain of 0.2%. The Dow up 59, up 0.1%. NASDAQ, as I mentioned, at a record right now at 20,653, up by about 0.3%. Traders sending stocks higher after parsing President Trump's latest tariff remarks. The 10-year ahead of bank earnings 4.42%, the 2-year 3.89%. Gold down $5 the ounce at $33.50, drop there of 0.1%. A retreat for crude oil. West Texas Intermediate crude down 2%, $67.09 a barrel. But Bitcoin, big story there, was trading above $120,000 right now, very close to that level, up by about 0.7%. Best Buy shares lower, down now by 2.2% after earnings, or actually after a downgrade. Best Buy downgraded to neutral at Piper Jaffray, which cites a lack of catalysts and competition. Bank earnings bright and early tomorrow morning. We'll be hearing from J.P. Morgan Chase, Citigroup, and Wells Fargo. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Fastenal shares rising as much as 6.4% earlier in the session. They're up right now 3.4%. It's a new all-time high for the company after they reported net sales for the second quarter that came in line with estimates from analysts, up 8.6% over the same period last year. This is a $52 billion market cap company. They distribute construction and industrial supplies, think nuts, bolts, screws, anchors, rivets, and other fasteners, as well as industrial, janitorial, and safety supplies, cutting tools as well. The company sells to builders, manufacturers, governments, and more. So really, it's a great read on the entire industrial and manufacturing economy, specifically here in the U.S. We've got with us the CEO of Fastenal, Daniel Florness. He joins us from Winona, Minnesota. Dan, welcome to Bloomberg Business Week Daily. Shares up today. Shares up more than 25% so far this year. New all-time high. In the earnings release, though, you said that, quote, the market conditions remain sluggish. What conditions specifically?
You know, we sell to a wide range of customers and industries, as you mentioned, across North America and in 26 countries in total, but mostly in North America. Our customer base has been relatively subdued for the last several years. In the fall of 2022, we saw some indicators saying it was going to slide, and we felt that as we moved into the second and third quarters of 2023. And it's been really weak since then. About 30% of our business is very production-centered business within manufacturing.
So are there any signs that that part of the business is improving, that those customers are seeing sentiment improve? Are you hearing anything from them?
I think the biggest sign that we're seeing is the knife has stopped dropping. You know, we were trying to catch that falling knife for a 2-year period. When I talk to our district and regional leadership throughout the world, the feedback I hear is, you know, they're not talking about this $200,000 a month customer whose business is off 60, 70%. You have a much more stability. Now, it might be stable at a lower level than it would have been 2 years ago, but it's much more stable, and so it allows our inherent growth to shine through.
So we've really been in this prolonged downturn, especially in the industrial economy. Are you seeing any particular green shoots or signs of inflection? And if so, which markets are you most optimistic about?
Yeah, so we're seeing some green shoots. For us, we are seeing some impact in energy. However, I would say that's probably more us taking market share than it is a lift in the tide. About 25% of our business is outside of the industrial, and within there, we're doing quite well. I hear a lot of commentary from our folks with data center builds, with even warehousing customers, and we've made really good inroads over the last 3 years into the government sector, and that primarily was an offshoot of COVID. During COVID, when supply chains blew apart, we stepped in to serve a lot of that market when they were not being served. And those folks have remembered that, and we've grown our business there.
So we need to, of course, talk about tariffs. How have tariffs really changed your thinking about product sourcing, particularly for fasteners, which we know, of course, are primarily sourced in China, Asia? What other options are you evaluating to mitigate the tariff impact here?
You know, so back in 2018, we did some short-term moves of our supply chain, but it was fairly limited because you just can't change. There's so much QC involved with vetting out suppliers that you couldn't move it fast enough. What we had done quietly over the last 5-6 years is continue in that progress, because the tariffs that were put in place in 2018 were sticking, and we expected more of it to happen, and we wanted to better diversify the supply chain for our customer. We did look at a lot of options. There aren't a lot of options within North America. We looked at some options of doing some manufacturing ourselves. The problem is the economics still didn't work. So it was really for us more about diversifying supplier base in general.
Are the economics of that going to work now in this new tariff regime? I think during the first Trump administration, the goal was to move things out of China, but as many companies are learning right now, it doesn't matter if it's China, Vietnam, or India. If it's not in the United States, there is going to be a tariff on it. At least that's what it seems like is going to be the case.
Yeah, the economics still do not work. And part of the challenge there isn't just the economics, it's the amount of time. When we were researching it very in depth 2.5 years ago, one of the challenges is it's easy to find a site. It's relatively easy to get a building up and get a supply chain set up. When I say relatively easy, I mean time frame of what it takes to do it. The most challenging aspect was the production equipment, of how many months it would take to get that. And so that aspect really pushed us to look more at geographic dispersion of supply chain sourcing, because the economics are still very challenging.
So how much of what you sell right now is actually made in the U.S.?
If I look across what we're sourcing, what our branded suppliers are sourcing, we've always estimated less than 50% is coming from the U.S.
And is that going to stay stable in this new tariff regime?
I suspect it will.
Okay.
So I know Fastenal raised prices back in April, especially as a result of tariffs. Historically, I mean, the company has been able to pass on pricing costs. What's really been the feedback here from customers? Has there been much pushback in terms of the ability and appetite for customers, frankly, to take on additional pricing, especially as we head into the second half of the year?
First off, we sell into a very competitive market. There is always pushback. The real challenge in the equation is communication. And one thing that helps in our supply chain, we're directly sourcing from the manufacturer that's producing the product, more so than most of our competitors in the marketplace, just because of our scale. And so we have the ability to see into the future farther than a lot of our competitors. And it puts us in a position to communicate very well. It puts us in a position to take steps as the inventory is turning. The one unfortunate part of that, it also can create fatigue for your customer. And I would say our customer is at the fatigue point right now, of where it's become challenging, but it always is. And it's all about communication and trust.
We're speaking with Fastenal CEO Dan Florness. The company reported earnings earlier. Shares are higher, reached a new record today. Shares up right now by about 3.7%. I want to talk a little bit about the One Big Beautiful Bill Act that became law on the 4th of July this year. In the press release for your earnings, you did mention it, but big picture, what does it mean for your customers and for your business?
You know, big picture, what it means for our customers is, if you look at some of the depreciation rules and the timing, it makes it very advantageous to make capital investment. And so that's the biggest piece that we see impacting our customers, because our customers have, especially on the manufacturing side, an incredible amount of infrastructure that they're investing in. And so anything that allows them to depreciate faster and to improve their return profile is advantageous for our marketplace. And that's a key element that we talked about in the release.
I know that you talked a little bit about, to us, manufacturing your own products in the U.S. and your suppliers doing it, but I'm wondering about your customers and the way that these so-called America First policies might help them reshore manufacturing back to the U.S. Are you seeing any evidence or hearing discussion of your customers beginning to move manufacturing back to the U.S.?
You know, I would say it's fairly limited, but again, that's not something that happens in 6 months that you set up. We've had some customers set up assembly operations, which you can do in a much shorter time frame as opposed to pure production where you're manufacturing components yourself, or you're changing your supply chain to more domestic type supply. But what we've seen is a lot more willingness of making investment even beyond the manufacturing capacity in the short term.
Fastenal has refocused on growing with larger customers. What are the key drivers there, and what additional investments do you need to make to enable growth with those customers?
Yeah, so a position we've put ourselves in for a number of years is we have very aggressively made investments, and this was starting back 15 plus years ago, of slowly building an infrastructure to move the supply chain closer and closer to the point of use. And what that involved for us is investing in a tremendous amount of vending infrastructure, and in more recent years, a lot more RFID type infrastructure to measure product movement within a facility so that you don't have to with human capital, physically observe product being diminished. You can monitor it electronically and remotely. And so we've made extremely large investments over the last 10 plus years in vending technology. And I'm pleased to say that vending technology is all manufactured in the United States.
Yeah, I was surprised when I went to your website earlier today as I was preparing for this to see those vending machines. It's not something that I've run into certainly in my life, but it's pretty cool to see that.
Yeah,
not just soda.
It's a snack machine.
Yeah, that's what I was thinking. It's like, it's a snack machine, but you can't eat what's in there, so.
Exactly.
Right? Okay. Hey, we just got about a minute left, and I just want to talk numbers real quick. Gross profit up 45.3%, up from 45.1% over the second quarter of last year. You said it was partially offset by higher import duty costs and higher fleet and transport costs. Are those costs, in your view, going to stabilize?
They're going to continue to rise because of the way our supply chain works. We carry a fair amount of inventory because we have such dispersion in our locations. So we carry quite a few months of inventory. So that's going to keep ratcheting up as we're on a FIFO basis inventory. So as that inventory continues to turn, that will continue to ratchet up a little bit as we move into the third and fourth quarters and into 2026. What really helped us during the quarter and what drove the improvement in our gross margin, set aside tariffs for a second.
Right.
We've put in place a faster expansion starting last summer to widen our inventory, and that's really what drove our margin this quarter.
Dan Florness, CEO of Fastenal. Really appreciate you joining us. Shares up today. New all-time highs, 3.8% right now.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ trading at a record. The S&P and the Dow both higher. S&P 500 index close to a record right now, 62.71, up by 11 points, up 0.2%. The Dow up 65, up 0.1%. NASDAQ up 68 now, up 0.3%. 10-year 4.42% with a 2-year 3.89%. Gold down $5 the ounce, $33.50. A drop there of 0.2%. And West Texas Intermediate crude down 2.2%, 67 even a barrel on WTI. Bitcoin, major story there, moving through $120,000 for the first time today. Right now, just below that number at 119,917 on Bitcoin, representing a gain right now of 0.7%. GM and LG Energy Solution plan to add more battery production lines at their joint venture plant in Tennessee to make lower-cost cells starting in late 2027. The amount of the investment not disclosed. GM right now up by almost 0.3%. Recapping, Bitcoin right around $120,000. NASDAQ at a record. S&P up by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Well, President Trump and his allies have seized upon a new way to criticize Fed Chair Jay Powell, his handling of an expensive renovation of the Federal Reserve's headquarters.
I think if Jerome Powell stepped down, it would be a great thing. I don't know that he's going to, but he should. Jerome Powell's been very bad for our country. We should have the lowest interest rate on earth, and we don't. He just refuses to do it, and yet he's spending $2.5 billion rebuilding the Fed.
That was President Trump just yesterday in Maryland. This construction project offers the clearest example yet of how Trump and those in his orbit are looking for every opportunity to scrutinize Jerome Powell's leadership at the central bank, even beyond his economic stewardship. Bloomberg News Federal Reserve reporter Amara Omokwe joins us now from our Washington, D.C. bureau. A $2.5 billion renovation, the topic of the renovation coming up when Jay Powell defended the renovations as necessary during his testimony to the Senate Banking Committee late last month.
Some of those are just flatly misleading. The idea of elevators, it's the same elevator. It's been there since the building was built. So that's a mischaracterization. And some of those are no longer in the plans. That's earlier. The plans have continued to evolve.
I do want to bring in Amara Omokwe. She's been writing about this. She's Bloomberg News Federal Reserve reporter. She joins us from Washington, D.C. $2.5 billion is what is at issue here. What exactly is the Federal Reserve renovation happening right now? And who started planning this? Like give us the details here.
Yeah, so the Fed is currently renovating 2 historic buildings here in Washington, D.C., and they've said those renovations are basically meant to consolidate all their operations in one place and really restore these 2 historic buildings that are very old and that the Fed says haven't been comprehensively restored in quite some time. And so that's kind of the Fed's rationale for these renovations. They were approved by the Fed's board several years ago, so this project is not a new project. The Trump administration scrutiny of it is new, but this project has been going on for quite a while. And so what we're seeing here is President Trump and those in his administration now taking issue with the overall price tag of the project, which has increased in recent years, and then also taking issue with what Fed Chair Jerome Powell said about some of the design features in the renovation when he was on the Hill last month talking about these renovations. And some of the administration officials are basically alleging that Powell was not truthful in that testimony, and that seems to be what they're using to kind of lay the groundwork to say that perhaps President Trump has cause to remove Chair Powell from his position on the Fed's Board of Governors, because of course to remove someone from the Fed's Board of Governors, you have to meet a very high legal standard, which is cause, something like malfeasance or neglect of duty. And so some administration officials seem to be trying to use this renovation issue to try and establish that cause.
Amara, as you mentioned, this is not new. This renovation has been going on for quite some time now, but is this the first time that the magnitude of the renovation is really being questioned?
Yeah, I would say so. And what kind of set this off was media reports about some of the features in the renovation. Basically, there was a media report that sort of characterized some of the features in the renovation as very lavish, very extravagant. And so that led to Republican senators, when Chair Powell was on the Hill last month, that led them to sort of question him over why there are some of these features, why the costs for the project have increased over the years. And so that is what kind of sort of brought this issue into the forefront recently. And then we've really seen the administration kind of seize upon it and use it as part of their overall sort of criticism of Chair Powell's stewardship of the Fed, both, you know, when they're talking about his interest rate, his stance on interest rates, and then also when they're talking about how he has managed this construction project.
What are observers of the Federal Reserve saying about this, and to what extent this could be, you know, this is not part of the Fed's dual mandate by any means, right? Stable prices, maximum employment. The Fed chair has laser focused on that mandate that comes from Congress. He tells us that when we hear from him every few weeks. What are observers saying about this sort of, I'm not going to call it a sideshow because that's editorializing a little bit, but it's not core to the Fed's mission by any means, and it's very political.
It is very political, and I think what Fed observers are saying is that this is just a part of this pressure campaign that President Trump and many in his administration are putting on Chair Powell and Fed policymakers to lower interest rates. Like, Fed observers don't see these things as separate issues. They see it as part of the same pressure campaign. And it also really matters because, of course, we know that Chair Powell's term is up next year, next May, and the search, President Trump's search for the next Fed chair is also on. And so it really does raise questions about what that search will look like and who President Trump will ultimately pick. Is he going to pick someone who is going to be more receptive to his views and the pressure that he puts on them when it comes to monetary policy and some of these other issues about the institutional management of the Fed? And so I think even beyond Chair Powell, it really does raise these questions about what the Fed looks like when the next chair takes over.
Amara, in regards to this renovation, what can really be done at this point? I mean, the builders are building. This has been going on for some time. Does the president then have the authority to come in and just cancel the entire thing, scale it back? How does that look?
I mean, I think the Fed has said that a lot of different input went into getting approved for this project, including the National Capital Planning Commission. Like, there are a lot of different bodies that sort of weighed in on this project, and I don't think it's within the president's purview to sort of stop the project. Like, in the law, the Fed has authority over its own buildings because the Fed, in so many ways, is an independent agency. But I think what the administration and what President Trump are really trying to do, they're trying to sort of question the optics around this, right? Bill Pulte, one of the administration officials who has really focused in on this renovation, will say things like, you know, Jerome Powell is keeping interest rates high and making affordability difficult for Americans while he builds himself a $2.5 billion palace, right? Essentially, I'm paraphrasing, but that's essentially like some of the lines of criticism. And so what you really see administration officials doing is really calling into question the credibility of Chair Powell. And again, you can't separate those efforts from the efforts that the administration is putting forward to try and make the Fed follow their lead on interest rates.
Amara, what happens to a Federal Reserve